S&P futures just hit their limit up.
So what happens at a limit up? Do we all go home?
We all go home.
I think everyone would like to go home.
Can we
but
get closer?
The good news this morning, guys, is that the division on Washington just seems to be fading away a little bit, and maybe both sides can get together today and put through a plan. And I think that would be hugely beneficial for confidence at a time when confidence this week has been somewhere near rock bottom.
John, be careful. I just spilled my coffee over by you. I don't want you to...
Thank you very much. You're going to clean
It's a mile away. Don't worry. We're socially distanced.
It's like X-Files in season 3
Are you
or something.
going to clean that up?
I'll clean that up for you. Please,
I'll get some headlines, some news.
My entourage will clean it up.
We can do that with John Tucker. Good morning, John.
Yeah, Jonathan, President Trump this morning taking aim at the Centers for Disease Control and Prevention. He is also targeting former President Obama, blaming them for delays in coronavirus testing. He's tweeted out this morning, for decades, the CDC looked at and studied its testing systems, but did nothing about it. President Obama made changes that only complicated things further. The global death toll, meantime, topping 5,000 after Iran reported another surge in cases and fatalities. And the House Speaker, Nancy Pelosi, says she is near agreement with the Trump administration on a bill to mitigate impact from the virus. The outbreak could result in 50 million jobs lost in the tourism industry globally. That's according to an estimate from the World Travel and Tourism Council. And New York City declaring a state of emergency, bringing parts of the financial and cultural capital of the U.S. to a standstill. Broadway being forced to take a month-long intermission after Governor Cuomo imposed a ban on gatherings of 500 people or more in the state to stop the spread. He says he can't even begin to calculate the amount of losses.
I can tell you this. I don't see any possibility of states being able to handle this on their budget without federal action.
The state's evaluating the potential for some public properties to be converted into temporary hospital spaces and is also considering a halt on elective surgeries. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm John Tucker. This is Bloomberg. Jonathan.
John Tucker, thank you, sir. So we get you guys some price action in the equity market in the United States this Friday morning. Good morning to you all. Equity futures limit up after a brutal day of losses, the biggest one-day drop since 1987. There's some 80s music for you in New York. This is Bloomberg Surveillance live on Bloomberg Radio. I love 80s music.
Is this yours, Tom?
This is Tom singing.
Hey, y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Influential.
Life. It's a funny old game, isn't it? 1 minute you're on top, the next, you need all the help you can get. Yeah, later, yeah. So make sure you're there for those around you. Don't just be a spectator. Be a supporter. Bleed for life. Join us at blood.co.uk.
How do you make the most understated Range Rover even more striking? Paint it Santorini black. Fit it with privacy glass. A full leather ebony interior. Then place it on 21-inch gloss black alloy wheels. The Range Rover Velar R Dynamic Black. Understated has rarely been so bold. Limited numbers available for a limited price. Search Range Rover Velar, Land Rover, above and beyond.
Limited availability while stocks last at participating UK Land Rover retailers. Check with your local retailer.
For up to 50% off a choice of floors and beds. For an extra 20% off selected ranges. For something for everyone. Carpet Right. For life. Offer ends Tuesday.
At the Bank of Santander, they've created Stan, a smart bot that can predict the future of remortgaging.
I'll read Stan. Will my mortgage rate go up?
1955 was the last time Newcastle won the cup.
No, try not to mumble.
Playing, let's get ready to rumble.
Meanwhile, at Santander, they can't predict your future, but they'll help secure it with great mortgage rates fixed for up to 10 years. See what's possible at Santander.
Early repayment charges apply. Lending subject to status and criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are rebounding from the worst sell-off in almost 3 years, surging 5.1% to exchange-mandated levels that prevent further gains as hopes of more robust policy responses increase. In Europe, the stock 600 index is up 6.8% after falling the most on record yesterday. That index set for its worst week since the global financial crisis. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures are up 126 points. Dow futures are up 1,110, and NASDAQ futures up 407. The DAX in Germany is up 6.3%. 10-year Treasury down 21 seconds, yield 0.87%. The yield on the 2-year 0.46%. 30-year yield 1.53%. NYMEX crude oil up 5.5%, up $1.76 at $33.25 a barrel. COMEX gold down 0.2% or $2.40 at $15.87.90 an ounce. The euro 1.1153 against the dollar. British pound 1.2555 and the yen 106.47. The VIX at 65.07. That's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thanks so much. This is Bloomberg Radio. We welcome all of you worldwide and particularly across America working from home on our many digital platforms, SiriusXM Channel 119, Bloomberg.com, but many, many other venues where you can pick us up as well. And the Terminal Radio Go is one other venue. But we welcome all of you working at home in these trying times. Trying times are identified by the Pacific Rim, starting with the Hong Kong protests and moving on to the first order moment of this virus. And one of the people that have given us great leadership, John, over the last number of weeks, often under real distressful conditions, has been Enda Curran, driving all of our economic coverage there.
He has been truly brilliant. He joins us now from Hong Kong, Bloomberg Chief Asia Economics Correspondent. Enda, welcome back to work. I know the office slowly filling up in Hong Kong and likewise in mainland China too. So let's talk about that. China coming back online. Apple reopening stores in the mainland. The good news. Give us the good news. What does it look like in China right now, Enda?
Yeah, so we'll do the good news and then maybe we can break it down. On a headline basis, obviously, as you know, the infection rates in China have slumped dramatically and it does appear to have been contained to Hubei province, as a result of which we are seeing factories reopen now and stores reopen. We're at about 80% capacity at the moment. Jonathan, that's a Bloomberg Economics estimate, so there's a way to go yet. The shopping malls are slowly reopening, slowly getting busier as well, according to anecdotal evidence that our own people have reported. And in Hong Kong as well, certainly the sense of panic that we had in mid-January has passed. There's a sense that perhaps we're over the worst here, but at the same time, there's no shortage of people warning against complacency and no shortage of people warning against a second wave of the virus outbreak.
No sign of complacency from the People's Bank of China this morning, and talk to us about what they've done.
So what they've done here is it's their tried and tested method. They're cutting the reserve ratio requirement, it's called. It's essentially easing up on the amount of capital that the banks have to keep on their books, and they're letting them. They're easing up about $80 billion worth of capital that the banks can now are free to lend into the economy. And it kind of fits this narrative that China's been taking a cautious, steady-as-you-go approach with its stimulus. It's not about a bazooka, it's more about targeted surgical strikes. We know that they're nursing a big legacy of debt from the last financial crisis. So this time around, we're seeing them channel money into the real economy, into those companies that need it most. Yeah. And that's why we've seen this triple R cut.
And I'm curious about just whether people are changing their psychology away from the emergency sort of containment to back to normal. In other words, are people still going to cafes? Are people going out and shopping? And this goes to the sort of idea of what kind of recovery are we going to see in the economy? Can you give us some color there?
Exactly right. I mean, if you take Hong Kong as the test case, I mean, there is a feeling among people here, it's patently obvious to see that they think they may be over the worst. We are seeing normality back in the shops. A good example was in mid-January, Hong Kong had the panic shopping, the shortages of face masks, the shortages of hand sanitizer and the like. We seem to have passed that phase now. The shops are well stocked again. And if you go around central Hong Kong, there's a reasonable flow of people and traffic around as they go back to the office. But the thing, Lisa, to remember is it's also a stress test in itself. Right, on paper, the cases in Hong Kong seem to have stabilised. They are increasing, but they seem to have broadly stabilised. But if people go back to work too soon, and if the immunity to reopen too soon, then of course we risk getting this backlash, not just of local cases, but also imported cases as people land in Hong Kong from the rest of the world.
And do you get a sense that going forward, we are going to see a full recovery in the economic data? In other words, we're going to see a big bounce back at this point. Are people starting to tabulate that, assuming that we are not going to get a second wave of a breakout in China?
That's right. I think, Lisa, the simple answer on that is I think the V-shaped recovery scenario has been shredded in most analyst books at this stage. What people are talking about now is at best a U-shaped recovery, certainly for China, and then by extension the rest of the East Asia region. A lot will depend on whether or not the virus actually is contained and what stimulus comes.
And the dollar's breaking out to new strength this morning, not where we were in the spike yesterday, but nevertheless elevated dollar through this morning. What does a stronger dollar mean for the Pacific Rim given crisis?
Well, a strong dollar is not good for this part of the world that relies on dollar lending, for example. It typically puts downward pressure on central banks. They have to ease their currencies, but perversely, ease their interest rates, I should say, but perversely, it's actually proving to be a good thing for Japan because unusually this time around, the yen is not strengthening. Yeah. Normally the yen does strengthen. That puts pressure on the Bank of Japan and the Finance Ministry. It's kind of the straw that breaks the camel back. But this time around, it signals a dollar shortage. That speaks to wider concerns in the credit markets. A dollar shortage.
Andy Kerner, thank you so much. Greatly appreciated in Hong Kong this morning. That phrase dollar shortage, you have to go the behavioral why. Why is there a shortage of dollars? And part of it is everybody wants them. You know, it's not just a physical shortage, it's the demand for dollars.
Do you know how vicious it's been in the FX market over the last month or something? If you just
look at 2% moves like they're normal.
Seriously, take a pair like euro-dollar. Euro-dollar through this start of February, people started to price in a weaker European economy. Okay, so we break 108, or we get in and around those levels anyway. And then risk aversion starts to kick in a huge way, and we start to unwind some carry trades. The money starts to go home, euro gets bid up, rate differentials come in really, really quickly, euro squeezes all the way hard towards 115. And then we break down again and the dollar rips because we're in the position we're in right now, which is it's what everyone wants, and euro dollar's back to 111.68. It just seems to me that no matter what side of the trade you've been on over the last couple of weeks, it's just been really tough. It's been brutal.
It's been brutal all around. I will say that the New York Fed's operation yesterday, the color that I was hearing from a number of traders, that this was absolutely a dollar story. This was a dollar shortage story. You saw stress in the dollar funding market. They wanted to just flood the market with dollars, not to necessarily ease some of the credit contraction or even the losses in equities, just to provide more dollars to make the function of the markets smooth.
Well, one of the themes here today with futures up 126, and we're in 10 big figures on the VIX, 65 on the VIX, 65 in 10 big figures, as we're in the 80s, and of course that means a plaza chord, and of course we got to go back beyond the 80s. John Farrell insisted
DJ TK, you're having a laugh with this music.
Because of 1987, right?
No,
you are having a laugh.
Was that
with
the
this
reason
music.
for
back
this?
to the 70s with ABBA. Okay, 72 for ABBA.
Are you going to sing?
No, I'm not going to sing.
You've got this.
Come on, go.
It's been a tough week.
You need a little ABBA.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically. Yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Life. It's a funny old game, isn't it? 1 minute you're on top, the next, you need all the help you can get.
Yeah, later, yeah.
So make sure you're there for those around you. Don't just be a spectator. Be a supporter. Bleed for life. Join us at blood.co.uk.
For up to 50% off a choice of floors and beds. For an extra 20% off selected ranges. For first-class fitting. For 0% free credit with no deposit. For a nice surprise. For bringing home a bargain. For heaven at long last. Carpet right for life. Offer ends Tuesday. Up to 4 years interest-free credit. Minimum spend applies.
Delayed at the dentist and now you're late for school pickup. You need a free now. Need to take the dog to the vet before lunch. Should have gotten a free now. Trying to get 4 kids and their baggage to the airport. Free now. Sometimes you can't get from A to B fast enough. Download the Free Now app today for quick pickups and reliable drivers, no matter the situation. Less hassle, more hustle with Free Now.
Mayday, Mayday, this is Red Dwarf. Our engines are dead and we're being sucked into a black hole. Can anyone hear me? Over?
The only thing that's over is us, Crichton. We're finished.
Guys, relax. I've got smart breakdown with the AA. It sends them your vehicle's fault data, so they should know what's wrong before they even get here.
I don't believe it.
What, that they'll already know what's wrong?
No, that you're actually capable of something useful.
The future of breakdown today. The AA. Drive smart. See theaa.com for details.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City for our audience worldwide, this is Bloomberg Surveillance live on Bloomberg Radio with equity futures limit up on the Spider S&P 500 ETF. We're up a little more than 5 percentage points. The volatility still sky high in the bond market. Treasury yields higher for all the wrong reasons at the long end, up by 13 basis points on a 30-year yield. And in foreign exchange, the dollar and dollar yen just all over the place through the week. The yen today, the yen is weaker against the dollar. Dollar yen with a move of 1.7%, Tom.
Dynamics are really extraordinary, and what's so important for people to understand, particularly those that aren't sophisticates about the spread market and that, we've all gotten used to one certain kind of spread dynamic for, 3, 4, 5 years, and we're abruptly back to something that you sometimes see. And Lisa, as you mentioned earlier, front and center, and I thought it was beautifully identified by Yalman Honorin yesterday and others. Janice Smilek in the New York Times this morning is brilliant on it. This is a dollar liquidity issue front and center for global Wall Street.
Absolutely, and you'd see that with the fact that companies are drawing down on their credit lines ahead of any potential liquidity crisis. I think we're getting to a point that is really important, and that is that central bankers cannot dampen liquidity, cannot dampen volatility in a way that they have for years. And this is a key question going forward. If the central bank doesn't have that put, what does the market do? How does that rearrange things for funds that rely on low volatility?
John, I'm going to you because you are the foreigner, and keep your social distance right now. I got an email from Bob at the Breakers last night. We were doing the John Farrow special, and he emails in.
What did he say?
And he goes, why are we bailing out Wall Street? The tension between America and Main Street and the fat cats on Wall Street, all of this dialogue is about bailing out rich guys.
Well, let me get you to clarify
How does that play in England?
What does that mean, how we bailing out Wall Street? At what point are we
We're going to have a fiscal stimulus, and maybe it'll be skewed to the little guy, maybe it won't, we'll see. And we've got we're bailing out Wall Street institutions.
But this is not about Wall Street institutions failing. This is about Main Street having a crisis and the effects, the ramifications, the second and third order effects on the financial system that has incurred a lot of leverage over time. This is not about a financial crisis that started with the banks. And I think that we've been really clear about that. So this is a question. It's not about the banks about to go under, right?
And as Ken Rogoff said earlier, I'm waiting for fiscal stimulus, and the British delivered.
We're all waiting for fiscal stimulus. Look,
vengeance.
I've been highly critical of policymakers in the UK over the last few years, but I think what they've done this week was just textbook. Fantastic example of coordination.
And relative to the other institutions.
Yeah, which has been hugely, hugely disappointing, particularly in Europe. Amazing to see the likes of Conte in Italy and Macron in France criticise the ECB for not doing enough, and then see the whole clean-up operation following that Lagarde news conference yesterday from Visco, from Trichet, from Lane over the ECB. Policymakers have really dropped the ball, and I know you're all sick of me saying it because I've been saying it so much over the last couple of weeks. The good news is that in Washington, I think we're finally coming together.
Yeah.
The Speaker of the House, the administration, finally coming together. And I'm hopeful that before the weekend, we actually can get our hands around a proper fiscal package that perhaps can address some of these concerns that are out there.
But then the question becomes, what does the economy look like after that? Do we end up in recession even with some sort of fiscal stimulus, Tom?
Joining us now, Lori Calvasina. Her charm is she's really acute at taking all this mumbo-jumbo and bringing it right over to what to do with the debris of your portfolio. First of all, Lori, in speaking to your clients, what's the damage right now? Is it truly 87 or is it 1998? What's the collateral damage this morning?
To be honest, I don't sense that it's like either one. As I talk to investors this past week, I think I'm talking to a lot of people who have lived through a lot of these situations, and they're trying to stay calm. They're trying not to overreact. I've talked to a few people the last couple of days who have been telling me they're picking up higher quality names that have finally come down in valuation, things on their shopping list for a while. Other than that, I don't really see sort of the institutional, professional investor community that I talk to. I don't see them really trying to trade this. I see them really trying to find, some bargains to pick up.
Laurie, would it be fair to say they're waiting for this whole thing to stabilise, and that the volatility on the screen, even on a morning like this morning, up by more than 5% on the S&P 500, they'll look at that and won't find it encouraging?
No, I think that's fair. I mean, I think that, we do need to see the volatility to die down to some extent to really get buyers back into this market on the institutional side. I talked to one client a couple weeks ago who said, look, I've done this, for many decades. And he said, I know that we always overreact when we try to trade these things, and we just need to let the market settle down, figure out where it's, where the low is, and then we'll come in and pick up the pieces. And I find that that's not the only person I've heard that from. I hear that from a lot of people. And look, I think that tensions are running high. I don't want to suggest that that there's not a loss of confidence out there. But I do think experience is trumping some of that, kind of panic right now, at least among the people I talk to.
I said at the start of the program, Laurie, that it's been a week that's felt like a whole quarter and Q1 isn't even over. And I think that's relevant at this point because we still haven't seen the data. We still haven't seen the earnings. And I don't think anyone can really model what the earnings picture looks like for 2020. How on earth do those pieces come together in the coming months, Laurie?
Well, I think they do have to come together, and I think one of the big problems right now is that investors have no idea how to value this market. So again, I think the experience that a lot of people have says you use dislocations like this to come in, buy stocks when they're cheap. But if we don't know what the E is, we have no idea what the PE is, and so we have no idea where that level of cheapness is. We have done our best to try to model out a few different scenarios, and we really think that, if we sort of end up with a negative 2Q on GDP and then start to slowly crawl out of the hole in 3Q, we do think stocks are probably below the average right now. So, starting to look attractive, maybe not dirt cheap at this point. We're trying our best to sort of put some numbers around this, but to be honest, I think it's very difficult, and I think that's one of the reasons why the market is searching for some stability here.
So, Laurie, we have that economic picture that's very, very cloudy. I want to talk about the technical picture because what we've seen over the past few trading sessions seems to be very technically driven, with leverage being squeezed out of the system, perhaps funds being forced to meet margin calls or redemptions or other types of activities. How far along are we in squeezing out extra leverage, the weaker hands, any potential outflows at this point? I mean, have we sort of seen the washout, or is this just the beginning?
My understanding from talking to investors, and again, I talk mostly to long-only institutional managers, some hedge funds as well, but talking to those folks, talking to our traders, what I think we've been seeing is more of a systematic sell-off, more of the algos, more of the machines doing this. I've heard a little bit about risk parity funds, but in general, we don't think that sort of the hedge fund community, the institutional community, or even the retail community, frankly, that would really drive a lot of ETF selling, we don't think they've acted in a big way yet. We think a lot of those folks are sort of waiting on the sidelines to see how this shakes out. And I'll tell you, when I look at the most popular longs in hedge funds, we call them our hot dogs list. Tom, you and I have talked about that before. Normally, in a drawdown like this, we would expect to see those stocks get smashed as hedge funds just pull out equity exposure. We are not seeing that. Those stocks have shown a remarkable resilience.
That's right where I wanted to go, Laura. I'm looking at a blue chippy type portfolio. I'm not going to name it, folks, but it's an Acclaim mutual fund, and it's down 27% from the peak here, call it Valentine's Day before the massacre. And I look, Laurie, at the cardinal strategy question, which is, do I buy the thing that went down the least, or do I buy the thing that tanked? Which is it if I want to acquire shares 6 months or 1 year out?
So I would tell you, what we're doing with our sector weights right now, we're trying to keep a balance. So we like utilities, we like healthcare, and we like industrials. Those are our three overweights. Now, the industrials is my favorite recovery pick right now. We are getting, some pretty bad moves in some of those stocks. They're extremely cheap down to relative financial crisis lows. They were already cheap before this because of the trade war. That's where I'd be putting my rebound money right there. Come on.
Let me, Laurie, for cocktail conversation, let me cut to the chase. Do I buy Amazon or do I buy Delta?
Look, I will tell you, I can't talk individual names, but I would say I have had some conversations with clients over the last few days about, how are consumer behaviors going to change in the middle of all this.
Okay, Laurie.
And so we know that e-commerce has been a big theme. We think that gets cemented here for people who weren't big adopters.
Okay, thanks so much, Laurie Calvasina. John?
Breaking headlines from the German Finance Minister Olaf Scholz that I think are going to be important for a lot of people to hear, saying that we will use every means necessary to weather the crisis. Also talking about a safety net for virus-hit companies, and going on to say there will be no limit on credit for a credit program for those companies. And we do get some price action. Yeah. German 10-year yields up by around about 14 basis points on a session now, Tom. Still negative on the day by negative 60 basis points. That is your yield. But a real move off the back of these headlines. Germany taking another step towards a fiscal package for this economy.
Yeah, and what's important here is China 2 hours ago. Germany now, it feeds on itself. Who's next?
It's slowly coming together, Tom, in the right way. It's not been as quick as I would like to see it, but it's slowly coming together.
DXY in the last 12 hours breaking out the new strength. We just had a 97.80 on dollar strength. Their futures up 126 right now. The Bloomberg NJIT STEM report, it's brought to you by New Jersey. Institute of Technology ranked in the top 2% of universities nationally for mid-career earnings of their graduates. Learn more at njit.edu. Here's Bob Moon.
Tom, Jonathan, Lisa, good morning. Here's what's making news in science, technology, engineering, and math. A genetic scientist looked deep into the DNA of the coronavirus is turning up clues into how it arrived and spread through the state of Washington and beyond. Like a detective studying fingerprints, Trevor Bedford and his colleagues are using the genetic code the virus leaves behind. One fascinating fact, the dots he connects are mutations in the genetic alphabet of the virus, a 30,000-letter string that changes at the rate of one letter every 15 days. Those tiny mutations don't change the virus's effect on people, but they do allow scientists to draw conclusions about how it's spreading from person to person. After a person gets tested for the virus with nasal and throat swabs, a small bit of the specimen can be used to rapidly sequence the virus's genome. That work has been happening not just in Seattle, but in other labs around the world. Scientists are sharing their results on a public platform where they've been sharing influenza genome data since 2008. This week, Bedford's lab at the Fred Hutchinson Cancer Research Center worked with California researchers to find apparent links between a cluster of cases in the Seattle area and the outbreak on the Grand Princess cruise ship in California. Bedford says they're all very similar genetically and that it seems very possible that virus from the Washington outbreak somehow made it on to the Grand Princess. And that's the Bloomberg NJIT STEM report. Tom, Jonathan, Lisa.
Bob Moon, thank you, sir. Let's get you those headlines, that news worldwide. Here is John Tucker. Hello, John.
And good morning, Jonathan. House Speaker Nancy Pelosi says she's near an agreement with the Trump administration on a plan to mitigate some of the economic blows from the outbreak. Pelosi putting off a vote on a package of measures proposed by Democrats after day-long talks with Treasury Secretary Steve Mnuchin. She says she hopes to announce today whether a deal has been struck. The outbreak of coronavirus that has left hundreds of flights grounded and dozens of cruises docked could result in 50 million jobs lost in the tourism industry globally. That's according to an estimate from the World Travel and Tourism Council, an organization that represents the tourism private sector. And the coronavirus outbreak bringing life to a standstill in New York City, declaring a state of emergency. And Maryland closing schools statewide. San Francisco suspending classes for 3 weeks. And while it hasn't been mandated by the government, schools across Massachusetts are choosing to shut their doors. And new infections of the coronavirus in China dropping to single digits for the first time since the country began reporting daily numbers in mid-January. It's another sign the viral outbreak has come under control at its epicenter. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm John Tucker. This is Bloomberg. Jonathan.
John Tucker, thank you. Let's get back to those really important headlines coming out of Germany. The German finance minister saying we will spend billions to cushion the economy, plans to set up a safety net for companies, and there will be no limit on credit and that credit program for those companies, Lisa.
Can I just give you a sense of the market reaction? The 2-year, 10-year yield curve in Germany just steepened the most since 2008. To give you a sense of the market reaction, Tom.
Really important to finally see that fiscal effort slowly in Germany coming together, Tom.
And I don't Deutsche Bank with a grim few days, including book value under 0.20, railing now literally off of a 4 handle to 5.40. Stay with us through the day. Stay with us worldwide. This is Bloomberg. Good morning.
With the Bloomberg Business of Sports report, I'm Charlie Pellett. The International Olympic Committee says it remains, quote, absolutely in line with its Japanese hosts and its commitment to delivering safe Olympic Games in July. Without making a direct reference to the global spread of the coronavirus, the organizing body for the Games also said it will continue to follow the advice of the World Health Organization. In addition to medals, there's a lot riding on the Games. The Summer Olympics have been expected to draw 11,000 athletes and more than 600,000 tourists. The soccer team Inter Milan says it will donate 300,000 medical masks to the Italian Civil Protection Agency. And as the sports world responds to the coronavirus in a number of ways, the PGA Tour says the Players' Championship will continue as scheduled, while in the UK, soccer matches will go on without spectators. And that's the Bloomberg Business of Sports report. I'm Charlie Pellett.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Global news 24 hours a day, on air and at TikTok on Twitter. Powered by more than 2,700 journalists and analysts in over 120 countries. This is Bloomberg Radio. Now, a global news update.
Special report, coronavirus pandemic. Concern over testing for the virus intensifying after closed-door briefings by Trump administration officials on Capitol Hill, with Democrats and Republicans expressing worry the nation is flying blind, as one put it. Pressure is mounting.
Dr. Anthony Fauci with the National Institutes of Health says not enough Americans are getting tested for the coronavirus.
We're not set up for that. Do I think we should be? Yes. But we're not.
The White House says it's working on the issue, but in the meantime...
So this next one's going to go down through the nose. So if I can have you open your mouth, breathe through your mouth.
Drive-through testing sites.
Life. It's a funny old game, isn't it? 1 minute you're on top. The next, you need all the help you can get.
Yeah, later, yeah.
So make sure you're there for those around you. Don't just be a spectator. Be a supporter. Bleed for life. Join us at blood.co.uk.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are rebounding from the worst sell-off in 30 years, surging to exchange-mandated levels that prevent further gains as hopes for a more robust policy response increase. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 126 points right now, at 5.1%. Dow futures up 1,110, and NASDAQ futures up 407. The DAX in Germany is up 6.1%. CAC in Paris up 7.1%, and the FTSE 100 up 7.2%. 10-year Treasury down 1 11/32, yield 0.94%. The yield on the 2-year 0.52%, and NYMEX crude oil is up 5.6%. That's a Bloomberg Business Flash. Tom, John, and Lisa.
Thank you so much, Karen. We were talking a lot about markets, but Tom, I really think we have to focus a little bit more on the price of oil right now, given the fact that that is the sort of dual shock that we've been looking at this week.
Well, it's a dual shock, and it is discrete and separate from aggregate slowdown, but really you can take a macro and global basis. No one does it better than Edward Morse of Citigroup. He's been just extraordinary on a holistic view of what the hydrocarbon shock means, given the other shocks that we have. He was very astute about the dynamics from 60 and the crash down to 33.30 right now in West Texas Intermediate. We're thrilled that Dr. Morse can join us again from Citigroup. Ed, let me cut to the money question. All of our listeners want to know, how close are Russia and Saudi Arabia to saying, this is a really dumb idea what Saudi Arabia did? How do we get this fixed? How close are we to that decision?
Well, I don't think we're quite there yet. We're dealing with people who are relatively stubborn in the approach that they're taking at a global geopolitical level. I think we need another month of them assessing what the pain might be. I think we'll see somebody coming to the table before the end of the second quarter, not much later than that. So the pain is starting to show. It's affecting both of them, and maybe the Saudis a little bit more at the moment than the Russians, because they have a significantly higher break-even price. But it's not been good news for either of them, and particularly the Russians have made a major misjudgment about where things were going to fall out.
Ed, we were talking earlier with Lori Calvasina of RBC Capital, and she was talking about the complete unknowns, the unknowables when it comes to earnings. The oil market is just as complicated, if not more, because you take the geopolitical situation that you're overlaying right now between Saudi Arabia and Russia, and then you pair that with an unknown amount of demand destruction when you talk about the lost flights, the lost tourism, businesses shutting down in the wake of the coronavirus. How do you even start to game out where oil prices should be?
Well, gaming it out is easier than you think. Deciding where on the dartboard you're going to throw your dart is another question. So we've done, kind of to simplify things, kind of a 3x3 matrix, looking at each of the supply side and the demand side to get these lumpy factors involved. Let me give you an example. I mean, you've cited one, the coronavirus, in our kind of worst case in terms of demand. If what we saw in China hits the U.S., in China we had a 4 million barrel a day demand hit in the month of February. We could have between the U.S. and Europe a 12 million barrel a day demand hit in the month of April. And, that's pretty unbelievable in a 100 million barrel a day market in which inventories are going to accumulate. Then look at the supply side, and I'll give you two wild cards there. One, Libya. When is the 1 million barrels a day of Libyan crude going to come back? And then Iran. I've heard an Iranian expert recently preview the attack that we saw a couple of days ago on U.S. troops in Iraq, and the scenarios that one can play for Iran hitting oil facilities in the Middle East again are numerous, and the probabilities are not zero. So, we can look at what we think of as our base case, where the coronavirus gets under control in the second quarter, and look at a base case on the supply side, in which they come to the table before the end of Q2. So. With that, we still get to a $20 price range for oil before this is over.
Yeah, Morris, and I just, by the way, I just could see you inviting Michael Corbett into your office to play darts on the official Ed Morse dartboard. That must be something to see. I'm looking at the Bloomberg screen, and big oil is enjoying a 9.4% dividend today. I don't need buy, hold, sell from Ed Morse, but what is the place of big oil and American big oil companies and Royal Dutch and the rest of them? As a general statement, what's their place in this oil disaster?
So there were people, pundits in the market, let's say 2 months ago, talking about how these companies are confronting massive ESG concerns, as though what was hitting the oil market in terms of where energy was in the S&P 500 is something new. You don't have to go back very far to see the last time energy stocks were that level in the S&P 500, and nor the time before that. And this is a cyclical business. It always will be a cyclical business. They tend to overinvest and then undershoot and underinvest, and I think that big oil has not gone away and is unlikely to go away. They can do things that are required by the world. They can develop very large hydrocarbon projects like no other companies can, and hydrocarbons are just not going to go away in the next 5 years.
Too short a visit, Ed Morse.
Thanks, Ed.
Thank you so much with Citigroup today. Thank you for your leadership on research on global hydrocarbons. John, it won't go away.
Euro dollar rolling over 111.44. Some dollar strength there for you. I would look to Europe though. Look at the equity screen over in Europe right now. Absolutely huge moves taking place over in Italy, up 14%. I know we've been battered. We'll be bounced back aggressively off the back of some headlines coming out of Germany, Tom, suggesting that the fiscal plan in Germany is slowly coming together. Likewise in Washington, and I think there is a silver lining at the end of a very, very volatile week that policymakers finally making significant steps in the right direction to do the right thing.
Dow futures 22,054, so you're down 7,000 Dow points, and you wonder what's the energy to get halfway back, and a lot of that comes from some form of institutional relief. What everybody agrees Wednesday, Thursday, Friday is not only a huge aggregate demand drop, but also what we see is in the dollar and the yield market. Look at the 30-year bond.
Regardless of what happens with policymakers, the next couple of months is going to be really, really difficult for the global economy.
It's still hinged on the virus.
Absolutely. It's a public health crisis. We've talked about that multiple times. But if we can get the right policies in place right now, if we can get the right policies in place really quickly, it will mean that the bridge we can build to the second half, the recovery in the second half, will be a whole lot smoother than it otherwise would be. And what we'll face is a temporary economic shock that doesn't materialize into a financial one that I think is just going to take a whole lot longer to get out of.
Let me do a data check. I'm going to start with Bitcoin. We've not mentioned it this week, and Bitcoin, Ethereum, and the rest have been absolutely hammered. Bitcoin was under, I believe, 5,000 at one point, down 199 right now, 5,525 on Bitcoin, way down from that 20,000 of another time in place. We're looking at the dollar again, that blended index DXY buttressed up against 98. That's not a high, but really surging up here with futures negative, futures up 126.
Futures limit up on the S&P 500 and a big rally for European equities as well. From New York this morning, good morning to you all. This is Bloomberg Surveillance.
Life. It's a funny old game, isn't it? 1 minute you're on top, the next, you need all the help you can get. So make sure you're there for those around you. Don't just be a spectator. Be a supporter. Bleed for life. Join us at blood.co.uk.
For up to 50% off a choice of floors and beds. For an extra 20% off selected ranges. For something for everyone. Carpet Right. For life. Offer ends Tuesday.
Get to know the real Ant McPartlin with the paper that knows him best. From the woman who saved him to the best friend who never gave up on him. Read all about how the troubled star beat his demons in an exclusive 24-page magazine special. Only in The Sun on Sunday this weekend.
What are you thinking about right now? Well, if you're not thinking about owning a stylish and sophisticated SUV, then this ad will be of absolutely no interest. Nothing. Nada. 0% interest, in fact. But that's exactly what Seat are offering. 0% APR across our entire SUV range until the 17th of March. So for just £249 deposit and £249 per month, you could drive away an award-winning Seat Arona. Which, if you think about it, is interesting. Visit seat.co.uk.
With Solutions Personal Contract Plan based on Arona SE technology on 48-month, 10,000 mile per annum agreement with £7,008 optional final payment. Stock vehicles only. Minimum 10% deposit on Taraco. Indemnities may be required. Seat Financial Services.
Heading to Leeds to see the grandparents. Little one's going to get spoilt rotten. If your trip is over a week away and you haven't booked your train ticket yet, that means you're in line to book LNER's Mighty Fine 29. It's only £29 each way from London to Leeds if you travel between 10 a.m. and 3 p.m. Monday to Saturday. Nan, we're on our way. Book direct at lner.co.uk. £51,229 seats available up to a week before travel. Standard advance fares on direct trains, subject to availability.
Online shopping can be a minefield. Often something that looks too good to be true probably is. Whether it's sold-out concert tickets, a half-price holiday, or discounted designer shoes. Don't be fooled. Always use a secure payment method and check who you're buying from is genuine. At Lloyds Bank, we believe nothing is more important than our customers' trust. And together, we can keep your money safe. Lloyds Bank, by your side.
Between game-winning shots and walk-off home runs.
Pitch. Swinging a line drive, slice down the right field line toward the corner. Looking up, and this one is gone!
Follow TuneIn on social media to stay in the game. From live reminders of the biggest games in every league, to staff pick recommendations of our favorite sports shows and podcasts.
Yeah, but you're really greedy, Dak, but nobody's thinking that
Skip,
yet.
you know how these contracts work. All that 40 years for 5 years for $200 million.
Follow at TuneIn on Facebook, Twitter, and Instagram to hear more sports.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
We have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. is Bloomberg Surveillance Economics.
We are being taken out of our comfort zone by the coronavirus.
Dollar weakness is pretty much a good thing for a lot of the rest of the world.
Finance.
We are going to see a global demand contraction this year, most likely, for oil. The financial health of the business sector has deteriorated somewhat.
Investment.
Obviously, the value and high vol stocks are going to continue to suffer.
It looks as though the bond market is talking itself into a recession here.
Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz on Bloomberg Radio.
Good morning, everyone. John Farrell, Tom Keene, Lisa Abramowitz. Thrilled you're with us, particularly those working at home across this nation and worldwide. All of our digital signals, we will let you know about those through the coming days and weeks, particularly Sirius XM, Channel 119, of course, Bloomberg.com, Radio Go on the terminal, and others. There's like a plethora of radio signals where you can stay in touch in these historic times. Right now, front and center is a jumble of Friday recovery from what we saw yesterday. Futures up 126, locked down. They haven't moved. I haven't had a chance to look at SPY yet, but certainly a lift to the market, and we see that on Chinese central bank action. And, John, we see it on German fiscal action as well. When the fiscal people speak, the politicians, maybe as we see from Speaker Pelosi today and others, well, that's got a little more weight than the monetary people.
The silver lining of a brutal week, I've got to say, for markets is the fiscal response worldwide is slowly coming together. The German finance minister in just the previous hour, we will spend billions to cushion the economy, and a lot of those billions will be to provide a safety net for companies. And when a German turns around and says there will be no limit on a credit program for companies, you've got to listen, because that's big, Lisa.
That is a big deal, and it's amazing to me that we're getting that kind of signaling out of the German government before the U.S. government, because that's not how it has been typically. I will say, if you want to know, SPY futures are up 4.9% currently, so talking about that. I think it's also interesting to look at gold ticking up just a touch. And the reason why I find this interesting is because it raises a question: have we gone back to some sort of normalcy, a more orderly trading day after a very disorderly week?
I want to make real clear here. I got dollar strength in 30-year yield higher. We're up 18 basis points on the 30-year yield. That is bond prices lower, yield higher.
Yeah.
And John, I'm going to get a 98 print on DXY. I'm not there yet. But anybody telling you coast clear in the dollar shortage is wrong.
Look, I think anyone who tries to draw a line back to fundamentals at any given point of the price action on any given day, 5 minutes later, it just looks completely different, doesn't it? And we've seen that in treasuries through the week. I don't think in the treasury market, and I think it's still too early to say things have settled down. For most of this week, you've got to draw a line back to liquidity, draw a line back to the technicals, draw a line back to some trades out there blowing up as well. That's been the story of the week for me, that we started the week worrying about credit risk. It really came onto the radar in a massive way as oil broke lower. Then as the week started to pick up, more and more worries about liquidity risk. In areas of the market where there should be depth, there should be liquidity, there just hasn't been. You put all of that together, and we said in the previous hour, it's been part of the reason we've just had a really, really brutal week. And not just the fundamentals. We haven't even seen the data yet, the earnings, the economic data, but the technicals too.
Yes, I just want to jump in, Lisa. Standard & Poor's ETF up 4.9% right now.
It's amazing to see some of these gains. John, I will go back, though, to this point that you made last week, which is when things move this fast, things break. And we saw things break this week.
Yeah, I think you're right.
That's fair.
I think we finally thought things break down in a big way.
And the question that I have going forward is, how much more breaking do we have to do? How many more leverage funds? How many more unwinds? How many more outflows? How much more of a dollar shortage? And what can central bankers do to stave off the breaking aspect?
I'm going to see it when I see the yield stop going up and the dollar stop going up. And there's a point where, frankly, the president starts jawboning on Twitter about the strong dollar. We all know how he feels about that. One of the best research notes I have seen comes from Raymond James. They have a history of speaking with brutal directness, and Tavis McCourt does that with 1, 2, 3, 4, 5, 6, 7, 8, 9 bullet points about trying to look on the bright side. We're bright and cheerful with Tavis McCourt this morning. Tavis, let me go down the page where you say one of the big surprises where stimulus will show up. How do you know that?
Yeah, I mean, it's hard to know for sure. I think what we do know is, if you look at the way these market corrections, or significant corrections, tend to resolve themselves. So if you look back at 2001 and 2008, is you have a very clear cycle where the market figures out, both bond and equity market, that something very serious economically is about to happen. And for the first several weeks, governments basically ignore it. And then there's a point in time where all of a sudden governments start taking it more seriously. And typically that comes first with monetary policy, because monetary policy can happen fast, quickly. And I think that's basically what we got yesterday.
One of those weeks, Tavis, where a lot of people are jumping into this market, getting away from the index level and thinking about single names. And I heard one big investor say recently, when Disney closed the parks, that's when it can't get any worse, and that's when I get interested in the stock. Because at the end of the day, when all is said and done, when this passes, you still have a fantastic company in the Walt Disney Company that will pick up the pieces and move on. And what happened last night? They closed the parks in Florida and Paris. So, Tavis, how are you thinking about some of these issues at a single name level away from the index?
Yeah, I think the market generally sells stocks off in direct relation to their leverage. Because all debt is bad when the market's going down. What will bounce back quickly is stocks that have leverage that's termed out for many, many years. So the risk in leverage is not just the size of the leverage, but also the shape of that leverage over time. And in a downdraft, the market doesn't really figure that out. It doesn't sort through the good and the bad leverage until we stabilize. And we may not be at that point yet. But at least the monetary policy is starting to happen, and historically that's caused a couple of months of at least stability in these downdrafts.
Lisa, that's the most crushing thing I've heard. I mean, Pharaoh's brought me down to a new low level where you try to comprehend that the Tea Party cups at Disneyland have been shut down.
Yeah, I'm sorry to hear that. Is that the reason why you moved a little bit further away from him?
Yeah.
A little more social distancing.
Is that where you were going next week?
Yeah, exactly. He was going to go to Disney World.
Vacation.
Every time I go out to L.A., it's the Tea Party cups.
I will say there's a question, and I wanted to get to this point that you made, Tavis, the idea of leveraged companies getting punished in particular, and that you want to identify those. It's not just those companies. I'm looking at this one analyst report from Cowen that Apple shares may face an additional downside risk of 15 to 20% based on their valuation in a worst-case scenario for revenue as a result of the coronavirus. How do you sort of account for that type of valuation or estimate? I mean, is that something that you're trying to game out here?
Yeah, I think eventually, after the response it's done in the next couple of months, the market will sort through where their valuations are supposed to be. And I'll bring an example. Like in 2001, the market was very expensive heading into 9/11. And so what happened was once the market started sorting out earnings in 2002, we were still expensive, so we headed back down. In 2008, 2009, we were relatively cheap on a PE basis heading into that. And so as it became clear in 2009 that earnings had bottomed and started moving back up, that the market reacted positively. And I guess part of the bad news about heading into this disruption is that I wouldn't say the entire market, but the large cap market was historically very expensive, very similar to 2001, and that may matter not today, but it may matter 3 or 4 months from now when we're kind of sorting through the rubble.
Well, Tavis, one final question. I want to go to the Raymond James wheelhouse. Mid caps, small caps, hammered. Do you buy the hammered small caps, or do I buy more Apple?
No, ultimately, there's no free lunch. The stocks and the sectors that will come back the fastest and the farthest from their bottoms are the ones that have gone down the most. I would say outside of energy. Energy is in a very unique situation, unlike any other sector. And so when you look at the small caps, they've been beaten down the most. Part of that's because of what constitutes the index. Part of that's because they generally have lower margins. But I would imagine if we're going to get a recovery, it's going to be much more severe in the small mid caps.
Tavis McCourt, thank you so much with Raymond James. A good brief there this morning. John, I really want to point that the 30-year bond we've lost complete. Let me editorialize. I've lost complete perspective. Under 0.80 and we've done a double now above 1.6.
Yeah, we're all over the place in the Treasury market. Let me bring you back over to the Bund market in Germany, though, where your 10-year yield is now negative 0.589%. But on the session, it's up by 15 basis points. Some headlines out of Germany. Germans looking to throw billions at this, according to the German finance minister, saying it's possible that the government will need to take on added debt as well. Looking to implement a stimulus program targeted at giving credit to specific companies, Tom. And this is the silver lining from a really tough week, that finally the fiscal plan is coming together.
And then what you do, folks, and this is a little inside baseball, but John can go with me on this on Friday, is Euro Swissy, comparing the Swiss franc to the euro. Of course, Germany with the euro rebounds. It was strong Swiss franc. Yesterday, the maximum strength, John, was at 12 noonish New York time, and we retested that about an hour ago, and we've reversed here weaker Swiss franc, which indicates that good news from Germany.
Yeah, we were breaking down towards parity seemingly on Euro Swiss, and now Euro Swiss getting in and around 106. So that's the big headline in the last, 40 minutes or so, that finally on the German side of things are coming together. And Lisa, the story about Europe has always been the following one, that they finally do the right thing in a crisis, or at least the suboptimal outcome in a crisis after ignoring it for far too long. I guess it's better late than never, despite it being somewhat too late, finally getting their act together.
We're definitely in the phase right now. Any move, if you unleash a sort of vast stimulus, is going to be good. I think that the conversation is going to pivot in the next few weeks as to what that stimulus is, because simply supporting companies through this period is not going to be enough to support some of the other issues with the German economy that are going to stem from this ongoing issue. So this is going to be some of the key questions. But the willingness to abandon the balanced budget, massive deal, and something that the market's taking note of today.
We'll do more data checks for Karen Moscow with those complete data checks as well through the morning on Bloomberg Radio. With our news in New York City, here's John Tucker.
And Tom, the National Institute of Allergy and Infectious Diseases Director Anthony Fauci says efforts by the U.S. public health system to provide enough coronavirus tests to the nation is failing.
The system is not really geared to what we need right now, what you are asking for. That is a failing. The idea of anybody getting it easily, the way people in other countries are doing it, we're not set up for that.
Fauci made his remarks during his second day of testimony before the House Oversight and Reform Committee in Washington. New York City declaring a state of emergency, bringing parts of the financial and cultural capital of the U.S. to a standstill. Broadway being forced to take a month-long intermission. This after New York Governor Cuomo imposed a ban on gatherings of 500 people or more in the state to stop the spread of the virus. The global death toll from the outbreak has risen to over 5,000 after another surge in Iran. Meantime, House Speaker Nancy Pelosi says she's near agreement with the Trump administration on a bill to mitigate the impact from the virus and to protect the healthy parts of the economy. Harvard University professor Ken Rogoff telling Bloomberg this morning the U.S. needs a large-scale fiscal response of $500 billion to $1 trillion for starters, and that the government must act fast. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm John Tucker. This is Bloomberg. Jonathan.
John Tucker, thank you very much, sir. Thank you very much indeed. An additional headline coming out of Europe. This is from the EU's von der Leyen, saying the EU will provide budget rules flexibility. This is not so much important for Germany, but much more so for the likes of Italy. Remember, there is a growth and stability compact which restricts how much these budgets can expand in places like Italy. The good news, slowly, just some flexibility from Brussels, added in with some emphasis coming from Germany. Finally, Europe. Deep breath, finally.
A senior project engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology, and as an adjunct professor is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city on the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that so in 10 years we're actually ready to take on those challenges when we have our first development in the water? NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Life. It's a funny old game, isn't it? 1 minute you're on top. The next, you need all the help you can get.
Yeah, later, yeah.
So make sure you're there for those around you. Don't just be a spectator. Be a supporter. Bleed for life. Join us at blood.co.uk.
Delayed at the dentist and now you're late for school pickup. You need a free now. Need to take the dog to the vet before lunch. Should have gotten a free now. Trying to get 4 kids and their baggage to the airport. Free now. Sometimes you can't get from A to B fast enough. Download the Free Now app today for quick pickups and reliable drivers, no matter the situation. Less hassle, more hustle with Free Now.
At Asda, with our great range of beers and cider, it looks like you're hosting. Get 2 packs for just £18 or just £10 each. Like 12 bottles of Corona or 10 cans of Copperberg Cherry. Cracking brands, refreshing prices. Don't compromise. Asda. Save money. Live better. Selected stores subject to availability. Offer ends 18th of March. 330 millilitres each. Drink aware.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
It is 8:17 on Wall Street, and futures are higher this morning. We go to the First Word breaking news desk for today's morning call. Here's Bill Maloney. Bill, good morning.
And good morning, Karen. U.S. futures are limit up right now, with Dow futures up 1,100 points. S&P's gained 126, while NASDAQ futures climbed by 408. The U.S. 10-year yield at 0.92%. Gold is up 12, oil trading higher, and Japan fell 6% overnight. While European markets are surging, led by 14% gains in Italy. Back in the U.S. on the economic front at 8:30, the import price index, and at 10 o'clock, Michigan sentiment. After the bell last night, Oracle sales beat estimates, and Broadcom pulled its sales forecast due to the virus. In other news, Roche gets clearance for a coronavirus test that's 10 times faster. And wrapping things up, Apple raised overweight over at Wells Fargo. Live from the First Word breaking news desk, I'm Bill Maloney. Karen?
All right, Bill, thank you. And to hear live breaking news over your Bloomberg, type squawk on your terminal, SQUAWK. That's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thanks so much. Again, locked up here, up 126 on futures. SPY, the ETF, showing a very solid positive 4% move. The VIX 65.07, but no doubt set lower than that right now. Dollar buttressed up right against dollar strength this morning. It is the single sharpest note I've seen on fiscal stimulus. And, of course, Henrietta Trey's at Veda Partners leads it by saying still there's no fiscal stimulus bill in Congress. Henrietta, I want to dovetail your work with Greg Valliere, who makes it clear this is the Pelosi bill. Is it the Pelosi bill?
I think so. I think the Democrats were probably the first ones. Well, they were the first ones that had a package that they were ready to unanimously vote on I've forgotten what day it is. Wednesday night, I guess. Speaker Pelosi's been working with Treasury Secretary Mnuchin for the last 48 hours. They have a package. Speaking with Senate Republicans in the last, 30 minutes or so, they seem like they might be able to endorse it, and it could pass next week. But obviously we will see the fine print of that and hope that President Trump endorses it and Senate Republicans can get on board later on today.
Henrietta, we did a lot of reporting here at Bloomberg about what took place before that address was delivered by the President of the United States just a couple of evenings ago. And it seems like, and I think this is really encouraging, that the President ended up, and the administration ended up, backing the advice of the House officials to ban travel from Europe when certain members of the administration, including reportedly Secretary Mnuchin, were worried about the economy. And I think it's really important that the health issue trumped the economic concerns when those rules and that plan came forward just the other evening. Is that your interpretation of things, Henrietta, that finally the shift is away from worrying about markets and worrying about the economy and really starting to focus on a public health crisis and what we should do about it right here, right now?
Sure. I guess that's one read. My view is that there was still a lot of dog whistles in that speech, coming out, calling it a foreign virus right out of the first sentence. Made it look to me like we weren't going to get a bipartisan bill immediately thereafter. And that was really where my priority was. Obviously, taking the coronavirus more seriously is a very welcome step from the administration. But from the market's perspective, there are folks on the street who've been hoping for a bazooka right afterwards. And obviously, if you're going to go on the defensive like that, with regards to how this is shaping up, how it came to be, passing blame, et cetera, which I also picked up on during the president's speech. It didn't bode well for legislation passing this week, which ultimately is what's going to happen.
Henrietta, another thing that President Trump has said this week, I forgot whether it was was it 2 days ago or yesterday, he talked about the goodies baked into the Democrats' plan for a bailout and that was one reason why he didn't support it. Are there projects, pet projects within the plan that is being drafted that you can pinpoint that are peripheral to the issue at hand?
Yeah, that's exactly the point I was hoping to make, but you made it so much more eloquently. That's exactly right.
Once a year.
I think we need to social distance a little more, Tom. Sorry, carry on.
Continue, Henrietta.
Just calling the bill, a Democrat's goodie bag because it provides the things that, low-income workers who are going to be the first line of impact here in the coronavirus as it spreads out across the economy. They just happen to coincide with the things that Democrats historically want. So we don't have a family leave plan in the United States, or a paid sick leave plan at the federal level here. We don't have expanded unemployment insurance benefits, all those pieces. So the Mnuchin Pelosi bill that we will hopefully get later on today, or Tom, if you prefer the Speaker Pelosi bill, will have narrowed the scope of what Democrats otherwise would want to leave.
That's right where I wanted to go. Michael Ferroli, publishing last night for J.P. Morgan, says needed $500 billion. Kenneth Rogoff of Harvard needed $500 billion to $1 trillion. I'm looking at the Henrietta Trey's math, and we're nowhere near that. Is that correct?
That's correct. What we're going to do here is at least a two-stage process. We're going to
give me a number. It's Friday.
6.
$500 billion sounds like it's going to be a little low. I think we're going to get a series of packages. You might not get one full $500 billion package now, but the congressional staff know that they're going to have to look at specific sectors like the airlines. There's already incredible lobbying going on. You're going to get all the tax council out there trying to get tax cuts. You could be looking at a series of packages that gets you above TARP, in my view, at this point, especially if this ends up being as protracted and extensive as it looks like it's going to be.
Henrietta, we got breaking news. We're going to have to leave it there, but just brilliant. Congratulations on a really cogent fiscal note. We'll look for Speaker Pelosi perhaps later this afternoon. John, translate this headline.
Really good news coming out of Europe that the EU is ready to trigger a crisis clause which would allow fiscal stimulus. In Europe, it's worth remembering that we have what's called a Growth and Stability Pact, which limits budget deficits to around about 3% of GDP, which means the likes of Italy and other peripheral nations that would like to do a lot to attack and address some of what is happening in their countries right now, they've been hampered by some of the fiscal rules over in Brussels.
Who would be against that?
Well, over the last few years, many countries have been against that. But in a crisis moment, it looks that finally they're going to do the right thing. So right now, I don't see any opposition to it whatsoever. On top of that, this things up for the likes of Italy. Fantastic news. I think we're always going in that direction. This loosens things up for the whole continent, which is really important too. The Germans, obviously this rule doesn't really apply to them because they've been running surpluses, but encouraging from Germany today and the finance minister that they are also looking to put on the fiscal tabs too.
It's time now for the dumb surveillance question of the morning, brought to you by Tom Keene. Okay, they're going to do billions of assistance at a somewhat zero or even negative interest rate. Why is anyone questioning this if they're giving away the money for nothing?
This morning they're not, but they have been over the last few years, which has been the problem. And they didn't need to wait for a crisis to do this. They could have done this for years. Growth in Europe has been absolutely terrible. There's no reason for them not to have been doing this.
Go ahead, Lisa.
Well, I was just going to say, there's a question, though, that I have, John, and this is something I'd love to hear more on from you. There's a difference between addressing this crisis and addressing the low-growth environment that was in Europe ahead of time, right? And the question is, how much does this sort of shift the narrative toward a more loose interpretation of a budget?
You know, just thinking out loud, my experience with European policy, specifically, for example, with the European Central Bank, it took a crisis for them to start acting like a central bank. It took President Draghi for that to happen. And then even after the debt crisis faded, they carried on behaving that way. And I hope that after this crisis has taken place, they start to do the right thing. And after this crisis fades, they continue to. From New York, you're listening to Bloomberg Surveillance Live on Bloomberg Radio.
Should I stay or should I go?
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
This is a Bloomberg.
Life. It's a funny old game, isn't it? 1 minute you're on top, the next, you need all the help you can get.
Yeah, later, yeah.
So make sure you're there for those around you. Don't just be a spectator. Be a supporter. Bleed for life. Join us at blood.co.uk.
A change is coming. Millions of people across the UK are realising that if their broadband's out of contract, they could be out of pocket. So it's time to switch and save with Vodafone Superfast Broadband for £22.95 a month. Join the Great British Broadband switch today. The future's exciting. Ready? Vodafone.
18-month contract subject to credit check. Superfast 1, 73% of customers receive sync speeds above 35 megabits per second. Source Ofcom fairer pricing. Price may change during your contract. See vodafone.co.uk/broadband.
Delayed at the dentist and now you're late for school pickup. You need a free now. Need to take the dog to the vet before lunch. Should have gotten a free now. Trying to get 4 kids and their baggage to the airport. Free now. Sometimes you can't get from A to B fast enough. Download the Free Now app today for quick pickups and reliable drivers, no matter the situation. Less hassle, more hustle with Free Now.
Get to know the real Ant McPartlin with the paper that knows him best. From the woman who saved him to the best friend who never gave up on him. Read all about how the troubled star beat his demons in an exclusive 24-page magazine special. Only in The Sun on Sunday this weekend.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We are live on a Bloomberg Radio where equity futures are limit up 60 minutes out from the opening bell in New York. And if you want to read on the equity market in America, go to the S&P Spider ETF for the S&P 500 in early trading, up by 5.6%.
Oh, a nice lift there in the last 20 minutes. The U.S. market lockdown has given. There's been a nice lift here, John.
A silver lining, Tom, after a brutal week, that finally we're starting to see a fiscal plan come together in Washington, and finally Europe is starting to make the right noises. Earlier is better than later, but better late than never, and it looks like we might get some fiscal stimulus from Europe, and perhaps quite soon.
Yeah, and correlating here, Swiss franc is against the euro is weakened a little bit. Again, that's correlating in with the German good news, and I'd really point out the dollar strength continues. We're about ready to get a 98 print on DXY. All you got to know there is, folks, higher 30-year bond, dollar stronger, and that there's a mix of there, really almost waiting for the Fed and waiting for Speaker Pelosi.
At least we spent the last couple of days saying that you can't really draw a line back to fundamentals for what's happening in treasuries because it's been so technical. It's been about liquidity. Dare I say, I think you can do that with the bond market this morning, with yields up on a 10-year bond by 17 basis points.
Yeah, people clearly expecting this to stimulate longer-term growth. In particular, I'm struck by the fact that the 2-year, 30-year the gilt yield gap in Germany widened the most since 2008 today, Tom.
Yeah, let's go to Vinny Del Giudice with some, I'm going to call it secondary economic data, but everything matters here now, particularly for Chairman Powell. Vinny, what do you have?
Exactly. Well, actually, 3 reports today. Number one, the import price index, down 0.5% in February, up 0.2% excluding petroleum. Low energy prices causing trouble in the petroleum patch, but guess what? It could be a little bit of a buffer for the rest of the economy. Cheap, copious oil. Also, top of the hour. No, actually, that's 10 a.m. Wall Street time. University of Michigan Consumer Sentiment Index. Guess what? Economists looking for a decline. Number 3, Bloomberg's monthly economic forecast, economic growth forecast, nearly halt in the second quarter, recession odds up. And to harken back to the 1990s, Treasury Secretary Robert Rubin once told us, no one has repealed the business cycle. I'm Vinny Del Giudice, Bloomberg Radio. Let's go back to New York.
Hey, Vinny, thanks so much. There's some real global Wall Street action right now. It's perfect to speak to Diane Swank on. Just moments ago, the Fed comes out with a repo report, and it's sort of like Greek to me. I don't want to do too much here, other than it was a relatively small number, and we got an immediate dollar spike up through DXY. The yen is getting absolutely hammered, called a 104 handle, even 103, out 3 big figures to 107.41. John, we got a weak, dramatically weaker yen, and into that persistent dollar strength, which is going to test where we were yesterday at the peak at about 11.54 yesterday on DXY.
A dollar yen with a move of 2.6%, and we're getting so used to these moves, we've become desensitized to them.
That was like a 90-day move.
Through the week. I mean, I can tell you that's the biggest move on dollar yen since March 10th, which is Tuesday.
Okay, let's bring in Diane Swank here.
Seriously.
There's a lot to talk about here, but with Diane Swank, with Grant Thornton. Diane, I just want to cut to sort of the immediate Friday thing away from the stimulus, which is house after house suggesting this is a Fed that needs to act. What's the urgency to cut rates now, Friday, versus get to the March meeting or actually act like adults and string it out?
Oh, I don't think stringing it out is acting like adults. When you're in a crisis, you move and you move aggressively, and I think we've seen other central banks do that, and I think what we're seeing now is the sort of response of get to where everybody else is now, and let's sort of have all our oars in the water rowing in the same direction to get us out of these turbulent waters, which we know on the health side of it, as scary and hard as it is, has an end game. Let's not let it mutate as it has been over the last 2 weeks into something much larger, much more consequential. And I think that's what you see out there. And we also have seen a real roar out there for the fiscal stimulus. The Germans coming out really strong. Used to be that stimulus in Germany was stingy to everyone else. Not anymore. Thank goodness. That's really important because this is an extraordinary event. And I think the idea is that the world wants to see everybody dancing together. This is a tango. This isn't a single dance, a single person dance. This requires a partnership between fiscal and monetary policy. And they want to see also the federal government step up as other governments have. And it now looks like we're finally moving towards that. Can't be soon enough.
See it happening in Europe. Really encouraging is the silver lining from a really, really tough week, Diane. What do we need to see from Washington? It looks like the politics have been put to one side, and perhaps House Speaker Nancy Pelosi can work with the administration to get something done here.
I think that's critical. This isn't about politics. This is about health. This is about life and death. We're done with politics. And I think all of us would like to see the politics go on the sidelines. But the bottom line is that, willingness to work with each other to get something done quickly, the willingness to stay around to pass something to get done quickly and not leave. Right. I think that was a real fear, is that all of a sudden the politics in this would force the two parties to go away and leave the rest of the country to deal with this without the leadership we need. And I think that's really important right now.
Diane, let's rip up the script. Of course, the president, we thank the president so much for listening to Bloomberg Surveillance this morning. The president of the United States, if you want to get money into the hands of people quickly and efficiently, let them have the full money that they earned. Approve a payroll tax cut until the end of the year, December 31. Then you are doing something that is really meaningful. Only that will make a big difference, exclamation point. Ms. Swak, I would suggest that Mr. Kudlow and Mr. Mnuchin pushed back against that idea. Am I right?
From what we know, they did, and that's because it's the people who are losing paychecks that are hurting the most and risk falling through the cracks of this crisis unnecessarily and adding insult to injury. We know that economic losses also exacerbate health losses out there. So, no, that's not right. It's not the only way to do this. There is more than one way to do this, and it needs to be hit. The economy needs to be supported on multiple fronts, which we're seeing across the world today. All of the world is seeing the need to bridge this crisis in the turbulent waters, give life jackets where we can in those turbulent waters so that we get to the other side breathing, not drowned.
A payroll tax cut is helpful. We can call it helpful, but it's limited. The reason it's limited is because it's so diffused, dispersed, Diane, that it's spread out through the year that you need a lot of this up front. The other reason it's kind of falls short is because there's a lot of hourly workers that will be sent home that won't be working those hours, that won't be getting a paycheck to get the payroll tax cut at the end of the month. So it's an option. I think it should supplement a broader package. I think it's an important option. It can make a difference, just not a big difference. How should they supplement the effort? They go forward with a payroll tax cut. I think something is better than nothing, but what else should they be doing?
Well, we need to be thinking about a whole spectrum of issues for paid sick leave, but also for paid leave for those workers who are not getting paid right now, helping to extend unemployment insurance immediately so that it doesn't dry up on people, also helping companies to continue paying workers even as they have to lay them off in this period of time. We know that there's an end date to this, that we will come out of it, and that makes it all the easier. As big as the stimulus is, it is temporary, and it can get us to the other side and seed the ground so that once we get there, we can move to start recouping some of what we've lost and not leave the economy so decimated that it can't respond to the stimulus that's left in the system, and that's what's critical.
Diane, let's talk about a price tag here. Harvard professor Ken Rogoff saying it should be $500 billion to $1 trillion for starters in order to support the economy through this. Do you agree? What number are you putting on this?
It's hard to say a number, but I agree with something that Jason Furman said, and that is, go big, and you can always, scale back if you need to, but the bottom line is the error side of this is going too small and not enough and too late. We're already a little bit late on this game. We've seen that in the financial markets. We need to go big, get us through this. We know that it is something that has an end date, and that is so important, is that this isn't making a commitment to a fundamental change in policy. All the other changes in policy that we need to deal with, we have to deal with those at a different time. Right now is focusing us, getting us through the crisis, through to the other side, so that we can actually pick up and take advantage of all the stimulus we have.
Diane Swunk, thank you so much with Grant Thornton this morning with huge news flow coming in right now, and particularly research flow, and also, of course, what we're seeing from central banks. Dollar out to today strength, blended 98.09, yen hammered, weaker 107.48, euro. Can I say euro's hammered? I don't think so, John. It's just ebbed away. It's sort of right where it was when Lagarde started her press conference.
Break it down. I've got to admit, I'm kind of confused by it, because I would have thought the prospect of fiscal stimulus in Europe would have taken some of the weight off what's happening with the monetary policy side and would have given yields a lift what it has done. And then I thought we would have had a euro bid, but right now, not much of one.
Yeah, but you have to think that this means that people are looking at perhaps a little bit more inflation or perhaps a little bit more stimulus on that side. Typically, before all of these market moves, more stimulus meant a weaker currency,
Usually
right?
more fiscal, though, means a stronger currency because it takes the burden away from monetary policy. And then you end up with the high yields on bonds that we've actually got. I think it's a little complex. Maybe we can talk about it a little bit later this hour. Let's get you some news, some headlines worldwide from New York. Here's John Tucker.
And good morning, Jonathan. The government's top infectious disease scientist says testing for coronavirus in the U.S. will accelerate within the next week. That's because of increased coordination with private companies. The global death toll from the outbreak, meantime, has topped 5,000. Well, as venues close across the nation and sporting events are put on hold, we have breaking news this morning about the Boston Marathon. In the Bloomberg 106.1 newsroom in Boston, we are joined this morning by Joe Shortsleeve. Joe, what can you tell us?
Well, we can tell you that the new date for the Boston Marathon that Boston Mayor Marty Walsh is expected to announce this morning, reliable sources are telling us here in Boston that date will be Monday, September 14th, moving it from Monday, April 20th to Monday, September 14th. In addition to that, we're told that the mayor and others will ask state legislators to declare a special state holiday on that day, similar to Patriots Day, which is observed here in Massachusetts. And once again, Boston Mayor Marty Walsh expected to make that announcement this morning. John?
Joe, thanks a lot. Joe Shortslave, the host of Bloomberg Bay State Business, heard weekdays at 3 p.m. Roche Holding has won emergency approval from the U.S. government for a highly automated coronavirus test, potentially speeding up tenfold the ability to test patients. The U.S. Food and Drug Administration granted an emergency use authorization for the test. New York City declaring a state of emergency. New York is banning events over 500 people and rules that will apply to Broadway theaters as well. Meantime, a Metropolitan Transportation Authority official said this morning that subway service in the city could be scaled back as the coronavirus outbreak leads to falling ridership. We have global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm John Tucker, and this is Bloomberg. Jonathan.
John Tucker, thank you, sir. The mood music improves. There is a silver lining at the end of a really tough week for you all, I'm sure. European equity markets absolutely ripping higher on my screen, with the DAX up by 8 percentage points, the FTSE MIB up by 16.6% on the session. Seriously, futures, equity futures higher, much higher, limit up 5% on the S&P 500. You go to the SPDR S&P 500 ETF, Tom, to get a read on what's happening in early trading, and that is up by almost 6 percentage points.
5.7, there's a nice correlation, but I really want to emphasize again, we still see dollar strength with that higher 30-year bond. 2-year yield up as well, 0.50, so it's got a different character than yesterday. We'll watch carefully that dollar strength. We're not yet through the dollar strength, John, that we saw yesterday. Let me get that time again. I can't remember everything here. I got to get the official surveillance mouse out. 12 noon exactly. Yesterday we saw dollar strength, and we're not back to that quite yet.
Things are getting better, and finally we're getting a fiscal response, maybe, potentially, increasingly. Looks like we might get one from Europe. I keep saying might because I feel like we've been here before with Europe and then they don't get over the finish line, but this morning it feels like maybe they actually will. The right noises coming out of Germany and out of Brussels too, Tom.
Busy Friday for all of us here at Team Surveillance. We're going to continue forward here through the morning. Don't forget the real yield, 1 p.m. this afternoon. John Farrow picking up the debris of the bond markets. This is Bloomberg.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. If you're hoping to refinance, you better be nice about it because mortgage lenders are being flooded with people just like you hoping to lock in lower rates, and demand is so hot that some mortgage lenders aren't even picking up the phone. If you're difficult, a negotiator, or just too slow, the lenders might just pass you by. Brian Koss, Executive Vice President at Mortgage Network, says his firm received more calls in 4 days last week than it usually does in a month, and he says companies are servicing their best customers first, and the ones who are on top of it, engaged, and give all their documents up front are getting the service. A lot's at stake for homeowners. Lending Tree says if you have a typical 30-year fixed-rate mortgage on a $250,000 home, you can likely save about $150 a month refinancing down to 3.25%. But that's assuming you can get that rate. Some lenders have been raising rates to slow down demand. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon NA. Member FDIC.
For centuries, Welsh farmers have been perfecting the balance between maintaining the spectacular landscapes of Wales while producing delicious lamb and beef. Lucky for us, we have everything we need from the elements: grass, rainwater, and a whole lot of pride. Sustainability is key as we continue to work in harmony with our surroundings to bring you a plate that's uniquely Welsh. It's in the taste. Learn more at eatwelshlambandwelshbeef.com.
Make life easy with Sky TV and Netflix all in one place on Sky Q. Discover Sky originals like Intelligence.
I think we can learn a lot from each other.
Right next to Netflix originals like You.
It's nice to meet you, love.
Find them all side by side on Sky Q. So, get Sky Ultimate TV for just £25 a month. Easy. Visit sky.com and join today. Ends April 30th. Prices may change. 18-month minimum term on Sky Signature. Set up £20 requires Sky Q connected to broadband. Correct at March 13th. Terms apply.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
Between game-winning shots and walk-off home runs.
Pitch. Swinging a line drive, slice down the right field line toward the corner. Looking up, and this one is gone!
Follow TuneIn on social media to stay in the game. From live reminders of the biggest games in every league, to staff pick recommendations of our favorite sports shows and podcasts.
Yeah, but you're really greedy, Dak, but nobody's thinking that
Skip,
yet.
You know how these contracts work. All that 40 years for 5 years for $200 million.
Follow at TuneIn on Facebook, Twitter, and Instagram to hear more sports. And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures rebounding from the worst sell-off in 30 years, surging to exchange-mandated levels that prevent further gains as hopes for a more robust policy response increase. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 126 points. Dow futures up 1,110 and NASDAQ futures up 407. The DAX in Germany is up 7.9%. The CAC in Paris up 8.7%. FTSE 100 up 8.1%. 10-year Treasury down 1 3/32, yield 0.91%. The yield on the 2-year 0.50%. 30-year yield 1.54%. NYMEX crude oil up 7.1%, up $2.24 at $33.75 a barrel. COMEX gold is little changed, up $1.40. That's up 0.1% almost. It's at $15.91.50 an ounce. The euro 1.1138 against the dollar. British pound 1.2489, and the yen 107.40. The VIX is at 65.07. That's a Bloomberg Business Flash. Tom and Lisa.
Karen, thanks so much. Again, the futures are locked up. We got SPY, the ETF, up a good 5.7%. There's a constructive feel to the market through what has clearly been an historic week. This is the adult global Wall Street conversation of the day, and that puts Damian Sassower in pretty good company with Jean-Claude Touché, Ken Rogoff, and John Taylor of Stanford to follow here in the next hour. And, they're all taking notes when Sassower speaks. Okay, I want to go to the dollar. I'm going to use the vanilla DXY, the plain series, and basically the Plaza Accord was 3 standard deviations out. The Rubin dollar was precisely 2 standard deviations out. We're nowhere near that right now. Dollar strength is about 1.1 standard deviations, maybe 1.2. We need a 109 DXY to get the Rubin dollar strength, essentially. Let me translate that for those of you with 2 hands on the steering wheel. There's a huge worry about the relative strength of the dollar for the international market, and frankly as well for the United States of America. What's the relative dollar story, Damien?
I'll tell you what it is. The dollar strength, what it does, think about all the fiscal stimulus we're coming through. Central banks are expanding their balance sheets, especially the G4 central banks. And what's interesting there is with a stronger dollar, that stimulus really doesn't have much value. You need the dollar to weaken so that in dollar terms, these balance sheets actually do expand and the stimulus actually carries value. This
is why we love having Mr. Sassower in, folks. This is so important.
He's blushing, Tom.
You're not in a vacuum. This is critical. It's not just Germany. It's not just England. It's not just Indonesia going, what do we do? Let's slow down and talk about this. Dollar strength is the politicians' worst nightmare globally, right?
Yes, certainly. And look, you see that reflected in cross-currency basis swaps, which is the last thing to blow up. We've talked about this. LIBOR OAS, FRA OAS, it was a matter of time till that funding stress moved into the offshore markets. We now saw it. It happened yesterday. We're seeing a little bit more of extension of it today, but it's trying to find a floor here. And until we see that stabilize, I think all bets are off. People should be sitting on their hands, making their Christmas lists for when the markets do recover, Tom.
All right, so can you translate that a little bit in terms of what this means for companies and governments in emerging markets? How much are their borrowing costs surging? Is there going to be some sort of liquidity crisis in some of the most indebted of the developing markets?
Well, now we're talking my book here, and amidst all the stuff that's going on in developed land, on the periphery here in EM, the carnage has been relentless. We've talked about currency levels in Brazil and Mexico blowing through to new lows. Record. Yeah, but really, what you're absolutely right. It's how much dollar debt, how much external debt do not only these companies but these countries have on their books. We've seen Lebanon default amidst this all. Ukraine, a star performer last year for institutional EM investors, you can't get out now. They basically shuttered their cabinet, and they're not going to qualify for the IMF extended fund facility. We're seeing similar things now in Angola, Nigeria, all the oil exporting frontier sovereigns along the perimeter with the oil price war between Saudi and Russia. Really, I have to say the only place that has acted like a safe haven that I wouldn't have expected is China. If you just look at the yuan dollar, which I agree is managed, but if you look at, dollar debt from CNOOC or Sinopec or Tencent or Baba prior to yesterday, they were all positive on the month, which is pretty amazing.
I was speaking actually with an economist yesterday who expects the Chinese economy to outperform dramatically because they took the pain first. Mm-hmm. They're going to recover the first, and they're going to continue chugging along, and they benefit from lower oil prices. I'm just wondering, though, if you look at the maturity profile of some of these nations and these companies, how much of an acute crisis is there, especially because the pain that we have seen has hit some of the biggest buyers of this debt and made them sort of, I don't want to say incapable, but much less able to actually lend to them.
I would say less of a coronavirus story, more of an oil story. The markets have told us basically that it's all the oil exporters, all the oil producers, Petrobras, Pemex, I think EM dollar debt is down nearly 6% on the month. Pemex is roughly a quarter of those losses. Think about that. I mean, this is a 2.5% position within the broader index, and it's just getting killed. So, I mean, I think the oil producers are really at risk here. I think the market is telling you they're more concerned about the price war in oil than they are about the coronavirus, at least as it relates to EM.
We certainly heard that from Ed Morse of Citigroup earlier. Damian Sassower, the dollar is stronger. Let's review again. I don't want to be in bonds. Bond price down, yields up. I want cash, and cash worldwide means I want dollars. There's a dollar shortage. Just, sort of. Hey, folks, Gianna Smilik in the New York Times today with a brilliant, simple explainer on this. Just really, really brilliant. How does an institution, any central bank or politicians or the president, how do they make the dollar weaken?
That's really interesting. I mean, you need to obviously get rid of all the fear, because this is obviously the safe haven asset du jour. I'm talking the dollar. Forget about U.S. Treasuries. I mean, they have no carry left. But yes, I mean, what needs to happen is you need to see some stabilization, specifically in rate volatility. I mean, let's take a look at the mortgage market here in the U.S., Tom. Despite the fact that U.S. yields have collapsed, mortgage yields have not.
Why? I got like 4 emails on this as well. Why?
It's 2 reasons. Number one, a lot of servicing costs, because everyone's rushing to refi at the same time. But number 2, in order for Fannie Mae, Freddie Mac, the agencies to manage to U.S. Treasuries, they're basically involved in caps and floors and swaptions, and the cost of those derivatives have gone up, and they're not reflecting the market.
That's not totally the reason. It's also that the banks don't want to take the risk on, that the Fed is unwinding its mortgage debt balance sheet.
I don't know if
maybe now they
may
won't.
not be.
Now they may not
I
be.
think we have to extend this conversation. There's far too much disagreement here. Well, look, we've got to get you out of here. Dollar stronger as we go. Damian Sassower, thank you so much. DXY, he's going to love this number. 98.153. Dollar really buttressed up against that record strength, recent record strength that we saw yesterday. The dollar moving 5.8 standard deviations from the bottom up to the top in the last 3-4 days. That is just extraordinary. Lisa, what do you see on the screen? What do you see in credit?
In credit, I'm looking at the action in investment grade bonds today. I was really struck yesterday. The biggest investment grade bond ETF saw its largest one-day plunge since 2008, and the redemptions from investment grade bond funds have been record, unprecedented over the past week. And I'm very curious to see how the action is, particularly in the lowest tier of investment grade credit.
Dollar burst through. For those of you on Global Wall Street, I know that's all you're watching. 98.206 with some huge velocity right now. I'll tell you when we get through what we saw in strength yesterday. 30-year bond 1.54%. Futures up and locked. Stay with us. This is Bloomberg.
They don't chant your name when you give blood or sing songs about you. But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
We've all been in one, but how much do you really know about black cabs? For instance, did you know that a black cab has to be tall enough to accommodate an individual wearing a bowler hat? That's a lot of space for you and your briefcase. Or that Free Now drivers can use the bus lanes, the perfect getaway to make your meeting in time. And with 2-minute central London pickups, you needn't waste time searching for a taxi. Just download the Free Now app today and take the hassle out of getting round London.
Make life easy with Sky TV and Netflix all in one place on Sky Q. Discover Sky originals like Intelligence.
I think we can learn a lot from each other.
Right next to Netflix originals like You.
It's nice to meet you, love.
Find them all side by side on Sky Q. So, get Sky Ultimate TV for just £25 a month. Easy. Visit sky.com and join today. Ends April 30th. Prices may change. 18-month minimum term on Sky Signature. Set up £20 requires Sky Q connected to broadband. Correct at March 13th. Terms apply.
Get the new Samsung Galaxy S20 5G at our introductory offer of $38.49 a month at Tesco Mobile. With 5G, you can download and share at amazingly fast speeds. But hurry, this offer ends 22nd of March. Search Tesco Mobile or visit us in store. Tesco Mobile, every little helps.
Ends 22nd of March. Introductory offer $38.49. After offer price $39.99. 36-month credit agreement and monthly usage agreements required. Subject to status. Limited 5G coverage. Terms apply. See tescomobile.com/terms.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Between game-winning shots and walk-off home runs.
Pitch. Swinging a line drive, slice down the right field line toward the corner. Looking up, and this one is gone!
Follow TuneIn on social media to stay in the game. From live reminders of the biggest games in every league, to staff pick recommendations of our favorite sports shows and podcasts.
Yeah, but you're really greedy, Dak, but nobody's thinking that
Skip,
yet.
you know how these contracts work. All that 40 years for 5 years for $200 million.
Follow @TuneIn on Facebook, Twitter, and Instagram to hear more sports.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the favorites tab. Pretty easy, right?
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Will accelerate within the next week because of increased coordination with private companies. That's according to Anthony Fauci, the government's top infectious disease scientist, speaking with MSNBC. Warren Buffett won't allow shareholders to attend Berkshire Hathaway's annual meeting in May amid growing fears about the spread of the coronavirus. The meeting generally draws thousands to his hometown of Omaha, Nebraska. Gina Cervetti, Bloomberg Radio.
Revisions, return policies. There are so many ways to redo a decision.
What are the ramifications if she crumbles or doesn't crumble?
Do they have any path other than the courts?
Except here, we have to get it right the first time.
We always talk about the losers in a trade war. Are there winners?
So that you can too.
How does your modeling have to pivot to reflect a different scenario?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. We have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
In this cycle, we've dealt with a lot of shocks.
It's important to understand what the Fed can and cannot do.
Finance.
There's no asymmetry left in markets. It truly is a zero-sum game.
We will get slower growth. I mean, let's not get confused about that.
Investment.
Very few investors want to own any energy to begin with.
There's a great deal of uncertainty. People are trying to hide in safe places.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene. What a Friday. What a week. Truly history-making. And, Paul, I think just to generalize right now, we have a bounce.
We have a bounce. We have a bid. We have limit up U.S. equity futures. We have yields rising. We have a bid for oil this morning, Tom. So, again, a little bit of fiscal stimulus potentially coming out of Europe, as I know you and Jonathan have been discussing this morning. And then the expectation that we will have some fiscal stimulus coming out of the U.S. Congress maybe as soon as today.
So. And Henrietta Trace, I thought, was just brilliant on that. I want to make clear that within her research note, she would suggest it's going to be a lot of little. But when you dovetail that up against the president's tweet of like 20 minutes ago, where he just says we need a payroll tax, and I don't hear anybody else talking about that, I'm sort of confused about how we get to a Pelosi bill later today.
Yeah, it's interesting. The question is, has she and Secretary of Treasury Mnuchin, really come to an agreement? I mean, you'd like to think that they can come to some kind of bipartisan agreement, get it out of the House into the Senate, and then, of course, onto the president's desk. That's clearly what the market is looking for.
Now, we want to get to the equity stories here. I really want to mention here, besides oil up almost $2, and that lockdown is going to go away at some point. SPY was up 5.6%. 5.7%. The ETF on the market. German yields are up fractionally as well. I'm dollar this morning, and it has been a one-way street to stronger dollar at 98.236. We're really buttressed right up against the dollar strength that we saw yesterday. Yen hammered 107.25, and the euro churning here 111.15, set just below when Lagarde started speaking. Was it too long days ago? David, where do you start today? I mean, you've got like 8 options within this historic moment, don't you?
I would simply go for the stocks that have fallen the most, and you've got to go right to the cruise lines as far as that goes, because you're seeing quite the recovery in those shares. Carnival's up 23.5%, and it's rallying from the lowest price since 1996. Bear in mind, Carnival fell yesterday by 31% as its Princess Cruises unit halted voyages for 60 days. And then you look over its peers, you see Royal Caribbean up 25.5%, and Norwegian up 35%. Norwegian has been the worst performing stock in the S&P 500 over the past month as that index fell into bear market territory, down more than 20%. And then you look at the airlines. You see American up 11%, Delta up 14%. You've got Southwest up 9.5%, United up 10.5%. American may be the most noteworthy because the carrier is climbing from its lowest price since merging with U.S. Airways back in 2013. And then you look at the companies that make planes and engines for the airlines, and they're rallying as well. Boeing up 11.5%, and that stock has been down this week by 41%. Biggest drop for any 4-day period since at least 1980.
I did not know that. Did you say that one more time? Boeing's down how much?
Was down 41% in the first 4 days of this week.
Wow. I mean, that's a real company. And they're drawing down on their credit lines, I guess.
On the Bloomberg screen, the PE, well, they got a PE problem here, but the yield is 5.3%, growing 21% a year.
Yep.
There you go. And when it comes to the engine makers, you see General Electric shares higher by 9.5%, and United Technologies, Pratt & Whitney, up 5.5% as well. Walt Disney higher by 8.5%, and that's after closing their theme parks yesterday. Disneyland, California, Disney World in Florida.
That is a rare occurrence.
Absolutely. I think it's for Disneyland, it's like the 4th time ever.
Yep.
As I recall. Starbucks up 6%. The coffee shop chain is higher after suffering its biggest 4-day loss since 2008. And from there, we've got a whole lot of other groups to talk about. The banks, clearly. Bank of America, Citigroup, JP Morgan Chase, Wells Fargo, all up at least 8% in early trading. You've got the energy stocks higher. Paul, you were talking about crude oil kind of doing a bit of a rebound today. And still looking at the biggest weekly loss since 2008, just not as large. So you've got ExxonMobil up 8% in early trading, Occidental Petroleum up 20%, and in oil services, Halliburton up 12.5%. And then we turn to the chip makers. You're seeing gains of 7 to 8% in Qualcomm, NVIDIA, Advanced Micro Devices, Micron Technology, and Broadcom's up 4%. The chip maker is higher even after withdrawing its fiscal year sales forecast because of the coronavirus outbreak. And Broadcom's second quarter revenue projection trailed analyst average estimate in the Bloomberg survey. Gap's up 7%. The apparel retailer posted fiscal fourth quarter earnings and sales at topped estimates. And Gap's profit forecast for the current year also beat projection, even though it doesn't yet reflect the coronavirus. And an interesting company, Slack Technologies, because it's business communication software, and you've got this whole shift to working from home.
Right.
There's been some real interest in the stock lately, and the company says there's been real interest in their software. So they came out with results, and even though if you looked at the latest quarter, or at least their revenue forecast for the first quarter, it came up short of estimates, and nonetheless, Slack shares are actually higher by about 2%.
David Wilson, thank you so much for just killer individual stock reporting through this historic week. Again, futures limit up of 126. It is a Friday, which means you have to get to Sunday and piece together an informative program. Good luck with that. Face the Nation, CBS. You can see it on CBS Sunday morning and hear it, of course, across Bloomberg, one of our most popular efforts of the week, 2-ish on Sunday afternoon. Joining us now, Margaret Brennan. Margaret, let me go to the reporting of your great team. The president's tweet 20 minutes ago, 40 minutes ago, shocked me, and that it was singularly on a payroll tax. Is the CBS reporting that Speaker Pelosi would agree to a payroll tax?
No, it is not. It has gone nowhere in terms of getting any traction in a Democratic-controlled House, and there's not a lot of enthusiasm on Capitol Hill for it at the moment. The focus and what Speaker Pelosi has communicated she's been speaking to the Treasury Secretary about is getting some of that immediate relief, paid leave, other things that really intersect with the immediate need of the virus. If people need to self-quarantine and stay at home, they need to know they can still get a paycheck as well.
I am flabbergasted by how the Senate majority fits into this process. He was going on recess. I guess he's not. What is the communication you observe and which you'll report on Sunday morning between legislative Republicans and what's left of an administration helping the president?
Well, we know that if indeed there is a deal in the House, as Pelosi has said she expects to see today, that it wouldn't be until next week that the Senate would be able to act on it. The leader is traveling, we believe, but he should be back to hold in session and do away with that recess that had been on the books because they need some action and need it now. In terms of communication, that is always a challenge between this White House and Capitol Hill. At the moment, the nervousness you're seeing in the markets, though, I think has really been a wake-up call for the administration that they need to have more clarity in their communication. On Sunday on Face the Nation, we will have Dr. Fauci with us to hopefully tell us what to expect in the week to come. It is just tremendous to think, Tom, how much life has changed across America from last Sunday to this.
We know,
and we want to, we want to set the table for what's coming next. And we will be talking to the administration about that.
And then I'll say, Paul, that Dr. Fauci is just truly national duty here. Yes. I believe he's 79 years old.
National treasure.
He looks like steel out there right now.
Margaret, give us a sense within the Beltway as to the feeling about how this administration has handled the coronavirus. It's obviously something we've never had to deal with before, lots of uncertainty. But what's the feeling about how the administration has performed so far?
You know, it is at a moment of crisis and a national security threat that you need to have faith and confidence in your officials and leaders more than at any other point. And you've seen that crisis of confidence. You've seen confusion in messaging, even with the Oval Office address. The president said inaccurate things about testing and who would be covered and what health insurers had actually agreed to do. That's why we're trying to fact check and be as clear as we can in trying to clarify what the administration's actually doing, what they're advising state and local governments to do. Mm-hmm. We've got Scott Gottlieb, the former FDA commissioner, who is now talking to the administration. Remember, he used to work for them before he resigned over policy differences, and now they're taking his counsel. He's been ahead of it in advising things like school closures. Right. And it seems there's a little bit of catch-up that we are now seeing playing out this week.
Margaret Brennan, thank you so much. Greatly appreciate that. Look for CBS Face the Nation on the CBS television networks. They do that Sunday morning. You can hear Face the Nation Sunday 2 p.m. in New York and Washington. And Bloomberg 1061 Boston Newbury Report. That's Face the Nation this Sunday at 2 on Bloomberg Radio. That's an extraordinary headline, Paul Sweeney. Russia doesn't see new OPEC Plus deal.
No, it's not, and it just shows you the standoff that we see between Russia and Saudi Arabia. And to be honest with you, I just don't see the end game here for either player.
Precisely what Ed Morris of Citigroup said. John Taylor coming up from Stanford in a bit. Right now, the news in New York City. Here's John Tucker.
And Tom and Paul. Anthony Fauci, director of the National Institute for Allergy and Infectious Diseases, says testing for coronavirus in the U.S. will accelerate within the next week. He cites increased coordination with private companies. Fauci telling U.S. lawmakers yesterday a lack of widespread testing of Americans thus far is failing. House Speaker Nancy Pelosi says she's near an agreement with the Trump administration on a plan to mitigate some of the economic blows. She said she hopes to announce today that a deal has been struck. Pelosi said she expects the House to then vote one way or the other. Amid the postponements and cancellations because of coronavirus, the city of Boston is looking ahead. They have new plans for the Boston Marathon. Bloomberg's Joe Shortsleeve is in the Bloomberg 1061 newsroom in Boston.
We can tell you that the new date for the Boston Marathon that Boston Mayor Marty Walsh is expected to announce this morning, reliable sources are telling us here in Boston that date will be Monday, September 14th, moving it from Monday, April 20th.
Boston's mayor will also ask the legislature to declare that day a holiday. Subway service in New York could be scaled back as the coronavirus outbreak leads to falling ridership. That's according to Sarah Feinberg, the interim chief of the MPA's subway and bus system. And the virus outbreak that's left hundreds of flights grounded and dozens of cruises docked could result in 50 million jobs lost in the tourism industry globally. That's an estimate for the World Travel and Tourism Council, an organization that represents the tourism private sector. And we have global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm John Tucker, and this is Bloomberg Paul.
John Tucker, thank you so much. We appreciate that update. Looking at futures here, we are limit up this morning. Looking at the S&P ETF, up about 5.7%. So a strong sense to the open of the market here. Looking at the Treasuries, down 1 5/32 on your 10-year. That pushes the yield up about 12 basis points to 0.92%. The 2-year at 0.52%. Looking at some currencies, as Tom and John have been reporting all morning. Dollar strength today. DXY 98.27, strength in the dollar. Seeing the yen pull back a little bit as well as we would expect here. So, Tommy,
the yen is a big deal.
Yeah,
I mean, it's hammered.
It's getting hammered.
I wonder what Bank of Japan will do to help out there.
Yeah, exactly. That has been a little bit of a safe haven here on the currencies, but pulling back this morning. And Tom, crude oil. We had that news out of Russia. That's still a standoff with Saudi Arabia. WTI crude has pulled off a little bit, but still up 3.8% today. WTI $32.77 a barrel. This is Bloomberg.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize change.
Influence.
Life. It's a funny old game, isn't it? 1 minute you're on top, the next, you need all the help you can get.
Yeah, later, yeah.
So make sure you're there for those around you. Don't just be a spectator. Be a supporter. Bleed for life. Join us at blood.co.uk.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are rebounding from the worst sell-off in 30 years, surging to exchange-mandated levels that prevent further gains as hopes for more robust policy response increase. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 126 points, Dow futures up 1,110, and NASDAQ futures up 407. The DAX in Germany is up 6.9%, CAC in Paris up 7.7%, and the FTSE 100 up 7.2%. 10-year Treasury down 1 8/32, yield 0.93%, and the yield on the 2-year 0.51%. We are also watching cruise lines this morning. They are surging. Carnival up 23.5%, Royal Caribbean up more than 24%, and Norwegian up 38%. And that's a Bloomberg Business Flash. Tom and Paul.
Thank you so much, Karen. Greatly appreciate it. It's been an extraordinary day for Paul Sweeney, John Farrell, Lisa Bramwitz, and myself, with a team that has gone out and tried to find the best and brightest given this crisis. We had Jean-Claude Trichet with us earlier. Kenneth Rogoff of Harvard University joined us, among other worthies. And John Taylor joins us now from Stanford University, and of course is public service to the nation after September 11th. Let me start with that. Professor Taylor, you more than anyone I know alive understands the relationship of nation to nation under crisis. Your Global Financial Warriors is a classic textbook of stress and crisis and how nations coordinate. Do we have the ability to coordinate right now with this virus?
I think the main thing is for each country to clarify what they are doing, and then as part of that maybe coordination. It may automatically happen that they're coordinating, but there still seems to be a little uncertainty about what each country is doing. So that's what we learned back right after 9/11, and it's the same is true today.
I don't want to get into a political debate, Republican, Democrat, but there's clearly many people suggesting that this White House is not a traditional White House. Are they different than what you experienced in your public service?
Well, of course they're different. Everyone is different. I think you're completely right, though, Tom. We need to get beyond this blame game and get started with what we need to do going forward. It's so important, and don't waste time on the blame, but be effective and find out how to do it going forward.
So, Professor, what would you like to see? I mean, this crisis is clearly unique. We haven't really dealt with anything of this magnitude, and some people are invoking kind of some 9/11 type feelings out there. What would you like to see this White House do right now?
I think the main thing is to say this is a medical problem. We want to prevent the hump, if you like, from getting very, very steep, to flatten that. Part of that is mitigation. Part of that is appropriate behavior, social distancing. There's discussions that are useful of what already happened in China and Japan, Singapore, for example. Why are we doing it? What's different? And I think that's the most important thing now.
You wrote a paper years ago, econometric models of criminal behavior. I'm going to suggest John Taylor thinks it's criminal behavior that we're going to the zero bound. It's a little levity there, folks, on a Friday after the week we've had. John Taylor, many houses want 100 basis point, 4 unmeasured rate cuts sooner rather than later. I can see you dressed in the raisin Econ 101 at Stanford having a tantrum. Discuss this. What's the efficacy of 4 rate cuts by the Fed?
Well, so far it really hasn't done much, and there's a lot of talk about the interventions in the markets yesterday. That's not really monetary policy. That's dealing with the troubles in the markets. I think whatever they do, they have to be clear about what's next, right? I mean, to bring the rate down much further, then you have to say what's going to happen afterwards. There's very little talk about that. Sometimes they call it forward guidance. Sometimes they call it the Reich-Schneider-Williams thing. What are you going to do after this? Because that's what people are wondering. What do you do when you get close to zero?
Okay, I know where you feel on the dots, but I mean, Professor Taylor, why can't they just come out and say, we're going to the zero bound, this is a force majeure event, and we want to make clear we will monitor the recovery of the American economy to get back from this ultra-accommodative stance? What's so hard about that?
I don't know. They should have done that a little bit more already, I think, Tom. They haven't, so you're right. Going forward, they need to do that. They need to be more specific about what the next steps are. People don't know, and they can be clear about that. I don't think it's going negative for the United States. That's not what they're talking about, but they're talking about holding lower for a little longer and describe how that's going to work. That's what people need to hear.
Professor, I also think the market is kind of certainly, hanging on their, on their toes here, just kind of waiting for some type of fiscal stimulus package. What do you think a package should be? Magnitude? What should it really address, in your opinion?
Well, I think we can learn a lot from the last crisis. These temporary changes don't make too much difference. People save the money and don't really go out and spend it. I think you got to focus on things that help people. Relating back to the medical issue again. Also, let's not forget the so-called automatic stabilizers. When the economy goes down, there's an automatic reduction in taxes, increase in spending. That's got to be part of the equation. But let's not be fooled to think there's going to be a big magical thing. I think there's an advantage, quite frankly, now of doing something because people are still quite skeptical of the partisanship and they want to see something else.
John Taylor, it's been too long since we've spoken to you. I want you to talk about the dearth of aggregate demand in this nation. We have a whole generation of kids that don't remember a 3% run rate of GDP. And the road answers, we need productivity, we need this. You know the song and dance.
Yep.
What's the Taylor prescription to get us back to an appropriate run rate?
Well, I think it's largely policy. As you know, I think that more investment, it maybe sounds routine, it brings to more productivity and more income growth. I think this is now an opportunity. Why not say we're not going to increase taxes for the near future? Both sides.
Or just unilaterally get rid of the tariffs. I mean, to be clear here, yes. Professor Taylor, we are talking about fiscal stimulus with interest rates at a level we never thought we'd see, right?
Right. So that's why I think you can do some things which people actually they're not talking about. Why aren't we talking about a moratorium on tax increases? Both sides say that. The Democrats could say that. That would be stimulating, quite frankly. Imagine if both sides got no tax increases. We don't see the reason for that. We want this economy could be hurting.
We need you to move, Professor. We need you to move to an East Coast school. Can you work on that? Don't let Stanford know, so we can get them earlier in the day. John Taylor, thank you so much in the early morning Palo Alto hours. Greatly appreciated, Professor Taylor. Of course, foundational to American economics. Paul, what's there that's important there is Taylor's defined as a Republican, but he's clearly looking bipartisan at some of these policy prescriptions.
And I think that's clearly, you take a look at the scope of this crisis, Tom, as it continues to unfold in the U.S., that's clearly what is required here. It's clearly what the markets are looking for, I think. So I think we're seeing part of the lift today is some sense that, the Congress is going to get us some type of stimulus plan.
Lock up, we are not locked down. Market's doing better, 5.7%. Right now, what we're going to do now, folks, and we're waiting for the Secretary of Treasury to move towards the microphones. He's standing in a somewhat dark and gloomy Washington. He's waiting for the ability to begin speaking now. So here is the Secretary of Treasury of the United States.
Significant increase in SBA lending authority. I've spoken to the Speaker about it. I've spoken to the Speaker and Mitch McConnell and Kevin McCarthy and the President about airlines. That's something you can expect we'll deal with quickly. And we're going to deal with things as they come up. So, again, certain authorities we have, authorities we don't have, we're going to go back to Congress quickly.
Specifically on airlines?
Do you have the support of Republican lawmakers for this deal?
We've been in constant conversation with the leadership, the Republican leadership in the House and the Senate. I got off the phone both Kevin McCarthy and Mitch McConnell this morning. We've taken comments from them, and yes, we will have support.
Mr. Secretary, can you address concerns about supply chain right now? Obviously, you've seen the pictures of people flooding stores across the country, buying up all types of things in bulk right now. There are concerns that those chains could be interrupted, given the interruptions we've seen at workplaces right now.
Well, let me comment. There's area of the economies that have been hurt very hard immediately. There's area of the economies this is the best thing this ever has occurred. So as you said, people are shopping. From the data I have from the credit card companies, what we've seen is, although travel spending is way down, spending on supplies, food, medical, pharmacy has almost offset that in the short term. And again, any supply chain issues the task force is focused on and will be dealing with. Don't see that as a major problem at the moment. I think, as you know, people were concerned about China. China's opened back up.
What's your message for Americans, particularly Americans post-retirement, who are looking at their 401ks this morning and are worried about what...
Well, my comment is don't stare at the screen, okay? It'll be higher a year from now, as I said. People who weathered the crash in 1987, people who weathered the financial crisis, for long-term investors, the U.S. is the best place to invest in the world. And again, I can't predict where the market is on a daily basis. People should be less concerned about going up and down.
The president tweeted about the payroll tax cut.
Yes.
We talked about that before. Do you think it's possible?
The president, let me be clear, the president's very interested in the payroll tax cut because it's a giant stimulus. We're working with Congress on that. If Congress wants to do the stimulus in a different format, we'll consider that. But the president wants to put money in the economy for hardworking Americans who are impacted by this.
Could it end up as a bargaining chip over on the Senate side?
Again, I don't want to say anything's a bargaining chip. The president's very interested in putting money into the economy, and we're going to do that.
Mr. Secretary, is tariff relief for China on the table as part of...
General tariff relief is not on the table. Ambassador Lighthizer and I have spoken. If there are specific companies, particularly small businesses, that are impacted by this, I'm sure he'll consider that, and he'll take those to the president.
Secretary, you said you met with the CEOs of the airlines.
Yes.
Can you say what they are asking for, or what you think they might need?
I think it would be inappropriate for me to comment publicly on the specifics of what they would need or the negotiations. What I would say is that after 9/11, this was an issue. The government dealt with it. If there are cash issues, and again, there's a lot of assumptions as to how many planes will fly, everything else. I think the airlines want to make sure that they can continue to provide domestic travel. They also want to make sure they can keep as many workers employed as they can. So again, it's a strategic importance to us. As I just commented on, if I weren't so busy working, I would be going home to Los Angeles, and I'd be perfectly comfortable getting on a commercial plane this weekend. Despite the fact that we've told people to shut down travel a little bit, people can travel in domestic U.S.
Who are the CEOs coming to the White House today? Do you agree that interest rates need to be lowered?
I'm not going to comment on interest rates. What I would comment is interest rates have come down a lot. Okay, the Fed has injected a lot of liquidity. We had a 30-year bond auction yesterday. We had more demand for that 30-year bond auction than we've had before. As people have commented, the market has moved, whether it's homeowners getting mortgages, whether it's companies borrowing. I mean, these are the lowest rates we've seen, and that's going to be a huge boom to the economy. Let me also comment, lower oil prices do hurt the energy sector, but for the average American, gas prices are going to be way down, and this is going to be for the airlines industry again. They'll be able to offer cheaper fares because of lower energy prices.
On the energy sector, though, as the gas prices go down, as oil prices go down, it's really hurting the shale producers.
Absolutely,
and those shale producers are the reason why we are now the number one producer of energy in the world. So, are we risking our position there by these prices going down?
Well, I think, the energy issue has nothing to do with the coronavirus. This has to do with kind of what's going on with OPEC and Russia. I can tell you I have been in conversations with the Saudis directly. The president has been in conversations. I saw the Russian ambassador the other day on other issues, and we talked about the energy. So I can assure you the president understands there's a big part of the U.S. economy that is impacted by lower oil prices, and we're on top of that. Let me take the last question.
Who are the CEOs who are coming there? The White House says the president's going to be meeting industry executives. Which industry executives?
I'm going to let the White House comment on that.
Are the airlines, just because you brought them up, and I asked this to the president the other day, I know you heard the question,
Is it the position of the administration that the airlines are simply just too big to fail?
I'm not commenting on whether they're too big to fail or they're not too big to fail. What I am commenting on is the airline industry is obviously very important. There are lots of other industries that are impacted, but it's obvious that this is a big impact. I think the good news is the U.S. airline industry is in very good shape. It's very efficient, and there's a short-term liquidity issue that we'll have to deal with. So this isn't a question of too big to fail or not too big to fail. It's a question of if there's short-term liquidity issues that impact lots of workers, we're going to be working with Congress on that. Thank you.
The Secretary of Treasury of the United States of America, the 77th Secretary of Treasury, of course, Mr. Mnuchin. And in New York, you will know the school, Riverdale, and on to Yale University, and then Goldman Sachs. And, of course, always acclaimed as stumbling into being the producer of Avatar. Paul Sweeney, right. That did pretty well, didn't it?
He did pretty well. So, I mean, again, I think the key message there, Tom, is that the administration, I think the message you want to get across the administration is focusing very intently on this coronavirus, both from a medical perspective and also from a financial perspective in terms of crafting a stimulus package with Congress.
And I will editorialize, folks, in my conversations with the Secretary over the years. I think my first conversation was maybe at his art gallery out in the tip of Long Island. That's the most relaxed I have ever seen Steve Mnuchin. He was really relaxed and in command of that press conference, very different than a more protective Mnuchin that we see. Maybe it is the stress of the crisis, who knows. Right now, we have the stress of a data check. Karen Moscow, Saint Moscow, has been a saint all week with a complete, thorough data check, and she comes to us cheerful with green on the screen. Karen?
Oh, yeah, well, there is green on the screen, so is that. And the opening bell brought to you by SEI. Asset managers don't get results that are off the charts when their solutions are off the shelf. Learn how SEI's operating platform can turn infrastructure into a competitive advantage at SEIC.com/IMS. The S&P 500 is up 5.5% this morning. It's up 135 points at 2615. The Dow Jones Industrial Average is up 5% right now, up 1,055 points at 22,248. The Nasdaq is up 5.4%, up 388 points. It's at 7588. 10-year Treasury down 1 8/32. The yield 0.93%. The yield on the 2-year 0.52%. NYMEX crude oil up 3.7%, up $1.14 to $32.64 a barrel. COMEX gold is down about 0.2% or $2.80 at $15.8760 an ounce. The euro is at 1.1114 against the dollar. The yen is at 107.11. Tom and Paul.
Karen, thanks so much. Up 1,000 points. That VIX, that first print in 12, huge figures. 63 on the dynamic of 30-year bond and the dollar. Yes, dollar strength buttressed right up against the peak that we saw yesterday. We're not through it yet. 30-year bond had a higher yield an hour ago. Still a higher yield, lower 30-year bond price, but not the tension that we saw 2 hours ago. This is a timely interview. In fact, in our years with David Sowerby of Ancora, this is maybe the most important interview we've ever done with him, because David has the courage to look at mid-cap and small cap equity investment versus the fixation on 12 stocks. David, small cap has been hammered. Large cap holds in better, and then few have been actually pretty darn good. Do you buy the deep discount of small cap this morning?
I think you do, and I have personally, Tom. If I look at an index that includes small and mid-cap stocks, the average stock before the opening today was 43% below its own 52-week high. Yet at the same time, they're generating 6% free cash flow yields. That to me is compelling. And when we know we've had this decline in small cap stocks,
right,
and the valuations are, I think, compelling on a cash flow basis. If you look and you buy and you look back 6 and 12 months later, you are amply rewarded.
Right. The wrap here, as you know, Mr. Sowerby, a small cap does not have the flexibility to institute share buyback at these discount valuations, and sometimes don't even have dividend and dividend growth flexibility. Is that true?
I don't think so. For example, Masco, let's call Masco Corp, which is in my backyard in Michigan, makes faucets, Behr paint. They announced a major share repurchase yesterday morning. I had a chance to hear them at an investment conference last week. They're shedding unprofitable assets. They're good allocators of capital. And when their stock on sale, as that we saw yesterday morning, they accelerated their buyback, and they're generating dividend growth of 6 to 8%.
And this is important, Paul Sweeney, 8% dividend growth, 1.4% yield, and the total return for the past 10 years has been 13% plus for MAS Masco.
Absolutely. David, just generally speaking, given this incredible pullback in equity prices that we've had just in the last, couple of weeks, what is your sense of just kind of valuation out there? Is valuation screaming at you here, or given the fact that we're likely to have little to no earnings growth this year, kind of give you a little bit of pause?
Let's give it a letter grade. And there's no grade inflation in Sowerby's classroom. Valuation is a B minus, maybe a B. We're not at screaming valuations of the lows of 2009 in March, but on a free cash flow basis versus price to earnings, I'm able to buy companies that are attractively priced so that when I look at companies on a believable cash flow basis, I'm getting very, I think, attractive valuations. If I throw in something like a dividend yield and a buyback yield and add in a free cash flow yield, to me, that's a compelling decision to certainly not capitulate and be an artful net buyer.
So have you seen, again, we've seen some incredible moves just in the past couple of days, accompanied by substantial volumes. Do you get the sense we are at that capitulation stage yet? I'm not really sure how you define it, but where do you think we are in terms of that, that last final wave of selling? Have we seen it?
Well, if data is the plural of anecdote, anecdotally, my most bearish, but one of my smartest institutional clients, who's a perennial bear, in the last 24 hours has said, let's put some cash to work. That's the anecdote. On the data side, when you look at the percent of stocks on the New York Exchange that are trading above their 200-day moving average, we have dropped to below 4% of stocks on the exchange trading above their 200-day moving average. We are pretty close to pennies away from those lows we saw in late 2008, early 2009. That, to me, suggests the market is washed out. And I'll say quickly, when I look at the ratio of insider buys to insider sells, that has spiked higher. You saw a name like Park Hotels yesterday, where the CEO announced that he was buying 78,000 shares as one data point anecdotally. Those all suggest to me we're in a bottoming stage.
Given that background, what are some of the sectors that you think investors should be looking at? Are there the ones that just gotten crushed in this wave, like the cruise lines or the hotels or some of those things, or do you go back to the tried and true tech stocks, FANG stocks, things like that?
I think your shopping list should include a little bit of both. So, for example, on the energy side, when so many energy stocks are off, and a company I own that's more in the mid-size, Marathon Petroleum Corporation, they're 67% off their 52-week high. There's an example for a beaten-up stock. Weyerhaeuser, where we haven't decreased the number of timberlands in this country, they're still growing, and housing is still quite healthy. 40% off their 52-week high. And then quickly you balance it off with some of the biotech stocks that have long-term secular growth rates, like Amgen, which is about 25% off its 52-week high.
David, thanks so much. Greatly appreciate it with Encore today. A quick view there on mid caps and small caps as well, and well-timed here. We're up, 1,100 points? I can't remember now, up 770 points in the Dow. Let me give you those levels, 21,963. SPX 2583. Boy, have we forgotten where normal levels are, because it's not normal. The VIX, the VIX is 12.34. Remember that, Paul?
I do.
Oh, no, the VIX is above a 15 crisis.
Yeah, exactly.
The VIX 66.12 is well right now. 30-year bond comes in a little bit. It's a higher yield, and we're watching dollar very carefully here with dollar strength this morning. Yen hammered 107.07. With the news in New York City is John Tucker.
Yeah, Tom and Paul, President Trump this morning taking aim at the Centers for Disease Control and Prevention, also targeting former President Obama, blaming them for delays in coronavirus testing. He's tweeted out, "For decades, the CDC looked at and studied its testing system, but did nothing about it. President Obama, he said, made changes that only complicated things further. The global death toll topping 5,000 after Iran reported another surge in cases as well as fatalities. And the House Speaker, Nancy Pelosi, says she's near agreement with the Trump administration on a bill to mitigate impact from the virus. The virus could result in 50 million jobs lost in the tourism industry globally. That's according to an estimate this morning for the World Travel and Tourism Council. And New York City declaring a state of emergency, bringing parts of the financial and cultural capital of the U.S. to a standstill. Broadway being forced to make a month-long intermission after New York Governor Andrew Cuomo imposed a ban on gatherings of 500 people or more in the state to stop the spread of the virus. He says he can't even begin to calculate the amount of the losses.
I can tell you this. I don't see any possibility of states being able to handle this on their budget without federal action.
Cuomo says that the state is evaluating the potential also for some public properties to be converted into temporary hospital spaces and also considering a halt on elective surgeries. Global news 24 hours a day on air and a quick take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm John Tucker, and this is Bloomberg. Paul.
Thank you very much, John Tucker. Looking at the markets here, Tom, we cut our gains kind of in half here. We have the S&P up 92 points, about 3.7%, half about where we were in the open here. So let's see if the market can hold any kind of green today.
And with the Secretary of Mnuchin speaking and some of the good conversations we've had, I go back to the heat of last night and Michael Ferroli at J.P. Morgan saying, look, we need $500 billion. And Kenneth Rogoff of Harvard saying, look, we need $500 billion. And, of course, Secretary Mnuchin didn't mention a dollar amount. But I wonder if that's some of the reticence here. We may get an announcement of help, but how helpy will the help be?
Yeah, it could have been. I mean, you get a little bit of a press gaggle there with Secretary Mnuchin, and you had no news. I mean, the market is starving for news coming out of the White House and Congress as it relates to a fiscal stimulus package. Why do you get in front of the press and have nothing to say?
I agree with one exception. He was extremely clear that this is a president who wants a payroll tax.
Yeah.
As you saw within the tweet. The dollar right up against yesterday's highs. That is concerning to many abroad. The VIX 68.27. Paul?
And we got just a little bit of green. We're going to hold on to that green. We'll get that to you. This is Bloomberg.
This is a Bloomberg Pursuits look at luxury in the time of coronavirus. First, some good news. While kombucha and wheatgrass shots might still be all the rage, the sugary caffeinated world of energy drinks is still a money spinner. Russell Golden Cloud Weiner and his mother, Janet, should get a $3 billion windfall, about the same as Oprah Winfrey's net worth, following PepsiCo's planned acquisition of Rockstar Energy Beverages. Globally, the energy drink market is expected to grow at 5.9% annually through 2024. Now, much of that is marketed at sporting events, currently feeling COVID-19 complications. The NBA called off the rest of its season after a Utah Jazz player tested positive for the virus. Major League Soccer and baseball and the National Hockey League also canceling, at least temporarily. As colleges close across the country, March Madness will no longer happen. It's an unprecedented step for the biggest annual event on the U.S. sports calendar and provides 80% of the NCAA's annual $1.1 billion in revenue. I'm Andrew O'Day, Bloomberg Radio.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE.
Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for. and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL Scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL, every journey matters.
At Asda, with our great range of beers and cider, it looks like you're hosting. Get 2 packs for just £18 or just £10 each. Like 12 bottles of Corona or 10 cans of Copperberg Cherry. Cracking brands, refreshing prices. Don't compromise. Asda. Save money. Live better. Selected stores subject to availability. Offer ends 18th of March. 330 millilitres each. Drink aware.
From home offices to shared workspaces, however you work, at Starling Bank, we'll help you to keep your business flying. With easy integrations that connect your banking with your accounting software, your business is ready for takeoff. Starling Bank, helping business fly.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stocks are rebounding from the worst day since 1987. Amid signs policymakers around the world are taking action to stave off the economic fallout from the coronavirus. Oil is jumping, and we check the markets every 15 minutes throughout the trading day on Bloomberg. The S&P 500 is up 4.1%, up 100 points to 2580. Dow Jones Industrial Average up 3.4%. It's up 721 points at 21,927. And the NASDAQ is up 3.7%. It's up 270 points to 7477. The 10-year Treasury down 1 12/32, yield 0.94%. The yield on the 2-year 0.52%, and the 30-year yield right now at 1.53%. NYMEX crude oil up 3.2%, up $1.01 at $32.50 a barrel. COMEX gold is down 0.6% or $9.90 at $15.80.40 an ounce. The euro is at 1.1118 against the dollar. The yen 106.86. And that's a Bloomberg Business Flash. Tom and Paul.
Thanks so much, Karen. Paul, help me out here. My computer's fritzing up here. The president, I believe, tweeted.
The tweet, of course he did. And let's say what we have. The Federal Reserve, Tom, is one of his favorite targets. The Federal Reserve must finally, all caps, lower the Fed rate to something comparable to their competitor central banks. Jay Powell and group are putting us at a decided economic and psychological, physiological, thank you, Tim, a disadvantage. Should never have been this way. Also stimulate, all caps. So urging the Fed to do what I think the market already expects the Fed will do, which is cut by a full basis point next week.
Just the two houses, Deutsche Bank really adamant about a 100 basis point cut, and Goldman Sachs and Jan Hatzi has followed up with that as well. It is rarely that when you are youngish that you can completely change an industry. Brian Kelly did that. Long ago and far away, that thud you heard was people falling off their chair laughing at a website called The Points Guy. This guy's going to last a month or two. 10 years later, The Points Guy is absolutely definitive, is the airline, the cruise, the travel definitive site. We're thrilled that Brian Kelly could join us today. Brian, I want to talk about travel and medical insurance. It's so critical right now. But what is your take on the longevity of our airlines? Do they survive this? Do they consolidate? What's the Brian Kelly vision?
You know, this is really tough on the airlines, and some are certainly more at risk than others. But my guess is that, there's already been so much consolidation that I think the government's going to, give stimulus and help out airlines because, there's not that many more to consolidate.
Let's look right now at one of your flyers who subscribes to the Points Guy blog site.
If I weren't so busy working, I would be going home to Los Angeles, and I'd be perfectly comfortable getting on a commercial plane this weekend. Despite the fact that we've told people to shut down travel a little bit, people can travel in domestic U.S.
The Secretary of Treasury hasn't been on a commercial flight in 15 years, like Brian Kelly's got a Gulfstream. But there's the Secretary of the Treasury, Brian, saying, go JFK, LAX, whatever our listeners are thinking about. Do you agree with the Secretary? You can go domestic?
You absolutely can. In fact, it's, airplanes are so empty these days, it's way more risky to get on a subway than it is on an airplane. I had friends fly, it's 5,000 miles from New York to Miami, and they got upgraded. Every single person on the United flight got upgraded to first class because there were that few people. So, there's not a lot of people on planes. Go somewhere warm where the virus allegedly doesn't thrive as much. So, obviously everyone, especially older people, need to take into account their own personal risk factor, but you can still travel, and it's a pretty seamless time to do it since airports are pretty much empty.
All right, Brian. So let's talk cruising business. Those stocks have just gotten crushed, and I think there's a real question about, will there be long-term harm to the cruise industry? Because they've been so closely tied to just people close together. It's a petri dish. What is your sense of the cruise industry longer term once we get to the other side?
I don't know if you know any hardcore cruisers. Cruisers are the most loyal people in the world. The cruise industry is really, they adapt to change. They're going to come up with new cleaning techniques. Yeah. Cruising isn't going anywhere. This is going to be a downtime for the industry for sure, but it will bounce back 1,000%.
If you're just joining us on Bloomberg Radio Nationwide, Brian Kelly with us, the points guy, rave about the site, and of course, he links it into intelligent use of credit cards. Remember, pay your bills. Your Richard Kerr, Brian, is definitive 11 minutes ago on what's covered by credit card, travel, accident, and emergency evacuation insurance. At the end of every ticket, you're supposed to do an insurance thing with Allianz or whatever. Should we be doing that?
No. When you buy online through an airline, it's travel protection. It's not even travel insurance, and it's got tons of holes in it. If you want to get insurance for a trip, I recommend go to an independent site like insuremytrip.com. And these days, if you want to be able to cancel for any reason, they have that type of coverage. But it's generally 14% or so of the total trip cost, but they're not going to reimburse 100%. Usually you get up to 75% back. So it's a pretty expensive gamble, but if you think there's a good chance of needing to cancel, you can add that cancel for any reason coverage, which does cover any reason, including pandemics, where most policies and most of the airline policies that you buy don't cover it. So the devil is in the details. Pay attention to the type of policy you're getting.
So if I do want to go somewhere warm and just buck the trend, am I going to get a great deal going down to Miami or Fort Lauderdale?
You're going to get an incredible deal, and the airlines are also letting you change for free. So, if you have a little bit of a risk appetite, just like in the market, where that's where makers are made when the market's down, the same thing goes for travel. But of course, listen to your doctor. I'm not a doctor. The situation's changing daily. You could potentially get quarantined somewhere, as we just saw with the new Europe travel ban. So there is risk involved, but for those people willing to take a little bit of a risk, there are insane travel deals to be had, especially using your points.
See, Tom, I think you got to take a look at the Four Seasons Miami or something like that. Hop on a plane.
I don't. We're just going to staycation. We're going to Afterthought said, we want to go south. They said, okay, we'll take the ferry to Staten Island and check it out. Brian, how are the credit card companies doing through all this? I mean, you changed the language of how we all speak about frequent flyer miles and all that. Are we going to, within this crisis, are we getting back to 100,000 free miles in a toaster?
It's interesting. There's a lot of different factors at play here. The demand, people aren't thinking about travel right now. People are thinking about, quarantining themselves in their homes and stocking up for the long haul. So I think there's going to be a drop in demand in terms of travel and travel credit cards for a little while. But, as far as loyal consumers go, points customers, people will come back. We already see the sunrise of this on the other side, and people will get back to traveling, and we'll need those points cards. So we're in a little bit of a rut for now, but we will make it through.
Brian Kelly, thank you so much, and thank you for the points guy. There you have it, folks, on airlines as well. I don't know what to make of the tape, Paul. Say something intelligent. I'm fried.
Yeah. It's just, can we hold on to the green today? We're up 560 on the Dow. We're up 1,300 points and change at the high, just at the opening here. Yeah. So giving something back. I think it's really going to be important here, Tom, to see whether we can hold some gains for today as we get through the day's trading.
We need to say thank you to our team. They have just done a fabulous job. I can't say enough about the quality of the guests, the conversation that we have had. We are produced sometimes by Richard Truman. Stay with us. This is Bloomberg Radio.
Life It's a funny old game, isn't it? 1 minute you're on top, the next, you need all the help you can get.
Yeah, later, yeah.
So make sure you're there for those around you. Don't just be a spectator. Be a supporter. Bleed for life. Join us at blood.co.uk.
Yeah, so I want to upgrade to, like, the latest phone you got. Okay. All right. But, like, for an unbelievably good price. Yeah. And I want it where I could choose the length for my own contract. Yeah.
On O2, you're our headline act, which is why you can get the phone you want for less per month with a custom plan on O2.
Minimum upfront cost, direct only device plan of 3 to 36 months, refresh credit by Telefonica UK Limited, terms apply.
The moment you realise you've drilled through an electric cable. The moment you realise that doesn't just mean no telly on the wall, but no telly full stop. The moment you realise you've got British Gas Home Care. And not just your electrics, but your plumbing, heating and drains are all covered. So the moment you've got a problem, make it our problem. British Gas, here to solve. Search British Gas Home Care.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Between game-winning shots and walk-off home runs.
Pitch. Swinging a line drive, slice down the right field line toward the corner. Looking up, and this one is gone!
Follow TuneIn on social media to stay in the game. From live reminders of the biggest games in every league, to staff pick recommendations of our favorite sports shows and podcasts.
Yeah, but you're really greedy, Dak, but nobody's thinking that
Skip,
yet.
You know how these contracts work. All that 40 years for 5 years for $200 million.
Follow at TuneIn on Facebook, Twitter, and Instagram to hear more sports.
Material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a Bloomberg Money Minute. Stocks are rebounding from Wall Street's worst day in 3 decades. Not all the way back for sure. We've got the major indexes up just about 5% or a little more after the Dow yesterday tumbled about 10%. The S&P and the Nasdaq were down just over 9%. And it was the worst day on Wall Street going back 3 decades on fears about the spreading coronavirus. But there are reports today that Congress is near a deal on a spending bill to help stem the fallout from the coronavirus outbreak. NYMEX crude is getting a jump up this morning, ahead about 3% at $32.41 a barrel. Disney is closing its theme parks in Florida, California, and Paris in response to the coronavirus pandemic and suspending all new cruise departures starting tomorrow. The action means a big chunk of Disney's business is going offline just weeks before spring break. Drug maker Roche has won emergency approval in the U.S. for a highly automated coronavirus test that could dramatically speed up testing of patients. Gina Cervetti, Bloomberg Radio.
They don't just talk to the most important people.
Can you give us your broad sense of the main driver behind the latest weakness?
They talk with the most interesting people.
When you talk to your clients, are they taking this seriously?
Lisa Abramowitz.
What's going to be the main driver of growth?
Paul Sweeney.
What did you take away from those Amazon numbers last night?
Bloomberg Markets.
Is it as ominous this time around?
Weekday mornings at 10 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com. Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Is there any bank right now in the U.S. that you think is a buy?
Do you think Chairman Powell has lost the market?
Jeff Bezos is no dope. What's the big ka-ching?
The big question, I think, for investors is free cash flow.
Breaking market news and insight from Bloomberg experts.
The U.S. tariffs actually hurt both China and the U.S.
Large strategics are looking to either buy or invest in innovation.
Soybeans and corn have been basically at or below the cost of production for about 4 or 5 years.
So what we see more bonds, more yield.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Good morning. I think that TGIF, as one of my friends said, was created for today. We are seeing a breath of relief, at least in equity markets, as people start to think about what some kind of fiscal stimulus it would be. We're going to talk more about that. Plus, we're going to get the latest on the coronavirus. Right now, though, let's get a check of that relief rally that is fading just a bit. Greg Jarrett has the numbers. Greg.
I'm sorry you said TGIF. I was ready to go out the door, Lisa. Stocks have come off by half from the stellar opening highs we saw. And they're still well up, don't get me wrong. Well up from the worst day since 1987, as a matter of fact. Amid signs policymakers around the world are taking action to stave off the economic fallout from the coronavirus. Oil went higher, too. Dennis Gartman, economist and former publisher at the Gartman Letter, tells Bloomberg it's in times like these when you have to trade equities with a bit of a different mindset.
It's a bear market. You have to trade differently. And in the bull market, you wanted to buy all the weakness. In a bear market, you want to sell all strength. And a day or two of weakness, a day or two of strength, and it won't be very long. Maybe 1,000 points on the Dow. Which to think about 1,000 points, when I first got into the business, the Dow was actually at 476. Now I talk about 1,000 Dow points as if it's something that can happen at a daytime. And oh my Lord, we did 2,000 points yesterday.
Just crossing the Bloomberg terminal, the Michigan preliminary consumer sentiment number is at 95.9. The estimate was for 95. We check the markets every 15 minutes throughout the trading day on Bloomberg Radio. The S&P 500 is up 3.4%, up 85. The Dow is up nearly 3%, up 628. The NASDAQ is up 3.4%, up 247. The 10-year is down 1.19 30 seconds. The 10-year yield is 0.9683. West Texas Intermediate crude is up 3.6% at 32.63 a barrel. Climax gold is down 1.2% at 1571.10. The dollar yen stands at 163 a barrel. COMEX gold is down 1.2% at 1571.10. The dollar yen stands at 106.97. The euro $1.1116, and the British pound $1.25.05. That's a Bloomberg Business Flash. Bloomberg Markets is on with Lisa and Paul.
Greg Jarrett, thank you so much. We appreciate that. Market Drivers is brought to you by New Jersey Institute of Technology, ranked in the top 2% of universities nationally for mid-career earnings of their graduates. Learn more at njit.edu. Looking at the screen, we do have green on screen. That's the good news. I guess the not so good news is we've given up almost half of the gains we had at the opening here. To get a sense of where the real action is, we welcome Bloomberg Stocks editor Dave Wilson. Dave, what are you looking at this morning?
Well, I mean, it is interesting to see some of the back and forth in individual stocks here. I mean, clearly you've seen the S&P 500 come off its highs. Now, all 11 of the main industry groups in the S&P 500 are higher, but some of the shares that started rebounding early on just haven't been able to sustain it. I look at like a Royal Caribbean, which was up along with its peers, Carnival and Norwegian, in early trading, and it's barely higher now. It's up 1%. ExxonMobil, which gained as much as 8% early on, now little changed as you get companies like Occidental and Apache and Halliburton taking off here. And then you got Broadcom, which came out with results late yesterday, and their outlook didn't go over so well. And the stock's down almost 2.5%, even though you look at other chip makers and they're rallying, notably Advanced Micro Devices up more than 7%. And then we throw in Slack Technologies, and you talk about a company that's supposed to be benefiting from the whole shift to work from home. And they qualify because their whole thing is business communication software. And they say that a whole lot more people are interested in their products. Problem is they have to compete with Microsoft, which has something similar. And so their outlook didn't go over so well, specifically on revenue. And Slack's down more than 17%. So there's a lot of back and forth going on, even amid the broader recovery here in stocks.
Let's take a step back and take stock of this week. This week was one for the history books. We saw 2 days where we had the limit down breached. Ahead of the open here in the United States today, we saw limit up breached. Incredible volatility odd action in the Treasury market with yields rising amid some of the incredibly deep risk-off feel that culminated in yesterday's move, which was the worst day for the S&P 500 since 1987. Can you give us a sense of what we're learning in terms of what was behind all of this? I mean, yes, the coronavirus, yes, disappointment about a lack of a fiscal stimulus from the U.S. and an insufficient response from the ECB. What was it on the technical side?
Well, I wouldn't even go that far necessarily. I would just say all that backdrop you're talking about, people basically realize that earnings are not just going to be there this year the way they'd anticipated. Now, the analysts, if you look at individual company projections, they haven't really come down yet to the point that strategists have. But the idea, you've got people talking about lower S&P 500 earnings this year. And this was supposed to be the year that profit justified the gains from last year. So, you know, you have that in the mix, and that certainly kind of came home to roost, you know, where the economy's headed, where earnings are headed. And I should point out, you're looking at an S&P 500 that's lower for the 10th straight week. So this has been building for a while, and what we saw this week is really kind of the culmination of what's been going on, you know, sort of beneath the surface this year.
But what's really interesting to me, at least, I saw a chart yesterday that's showing kind of the number of days it took to get to a bear market. And, you know, this one was how many days? 20 some odd days. Right. And, you know, the average was, you know, 60 or 70 or 80 days. This was so quick to go from, you know, the peak of the market to bear market territory. It's just extraordinary. And I wonder what that means about any potential turn back up in the market.
Yeah, absolutely. By the way, when I meant 10 weeks in a row, I should have been talking about Exxon shares, not the S&P 500 overall. But you're right about how fast this has come on. I mean, you're looking at, you know, the second time in 3 weeks that you're down more than 10% on the S&P 500. So it has come on relatively quickly from that regard. And as to where we go from here, I mean, it really comes down to, you know, when you get companies reporting first quarter results, how do they actually look? And do they have any better sense than they do now of what's ahead for the second quarter and the rest of the year, given what's going on with the coronavirus and the way it's hurt business? I mean, we've seen it, you know, left, right, and center at this point. We know it's going to be devastating for a lot of companies. And the real question is, how much?
Well, and we're talking about equities, but I want to also give a sense of what's going on the credit side, because I have been blown away by some of the flows in particular. And I'm not talking about high yield. I'm talking about investment grade. This, according to Bank of America research that tabulated EPFR data. Last week, high grade funds suffered their worst outflow ever, twice as large as the previous largest outflow. Over the past 2 weeks, IG funds have suffered outflows to the tune of $17.1 billion, equivalent to 1.15% of all assets under management. Okay, this to me was part of what was behind some of the fire sale action that definitely led to some disorderly unwinds. Did you see the same thing when you looked at stocks?
Well, I mean, we've certainly seen outflows. In fact, you know, that they were happening before they were happening in investment-grade bonds. So the idea that the market is kind of catching up, in a sense, to the way that money's been pulled out of shares, I mean, there's something sort of compelling about that. And you see the extreme moves and, you know, just people kind of not standing in the way of them. And that is, as much as anything, you know, it's the money coming out of the market.
You know, Paul, I was speaking with Lori Calvasina this morning. We were speaking with her on Bloomberg Surveillance, and they were, and she was saying, you know, the money has been really algo trading for a lot of this week, and that the real money trading, including the hedge funds, really haven't gotten involved yet to sell.
Is that right?
That if you look at some of the hottest hedge fund holdings, they haven't seen disproportionate losses, which raises a number of questions, which is how far in the shakeout are we? How far in the reevaluation of risk and profits, given where we're at right now?
Interesting. Bloomberg Stocks editor Dave Wilson, thanks so much for joining us and giving us that perspective on this market open. Again, we're up about 3.8% on the S&P. We're up about 3.2%, 688 points, called 700 points on the Dow Jones, bringing us to 21,900 on the Dow right now. Right now, let's head down to our 99.1 studios in Washington, D.C. to Amy Mars for World and National Headlines. Amy.
All right, thank you, Paul. House Speaker Nancy Pelosi has been talking about that agreement that they are close with With the Trump administration on a plan to mitigate some of the economic blows from the coronavirus outbreak, Pelosi putting off a vote on a different package of measures proposed by Democrats after day-long talks yesterday with Treasury Secretary Steven Mnuchin. She says she hopes to announce today that a deal has been struck. Senate Majority Leader Mitch McConnell, meanwhile, says the Senate will be staying in session all next week. They will not be leaving Washington as they were supposed to, so that they can take up any legislation that emerges from the negotiations. This as the head of the National Institute of Health's Allergy and Infectious Diseases Institute, Dr. Anthony Fauci, tells ABC that Americans need to prepare for things to get worse before they can get better.
It's going to be at least a matter of several weeks. I mean, it's unpredictable, but if you look at historically how these things work, it'll likely be anywhere from a few weeks to up to 8 weeks or more.
So keep that in mind. And the Democratic National Committee, meanwhile, moving Sunday's Democratic primary debate from Arizona now to Washington, D.C. And as we told you yesterday, there will be no live audience. You'll be able to hear that debate live, though, here on Bloomberg Radio. Other stories we're watching, 3 surveillance powers available to the U.S. government are set to temporarily expire Sunday after 3 senators opposed a bipartisan House bill that would renew the authorities and impose new restrictions. The Senate will consider the House bill next week, but it is not clear if the president will sign it. Senate Majority Leader Mitch McConnell had hoped to pass it yesterday, but he had to delay it. 3 senators, 1 Democrat, 2 Republicans, said they objected to it. Global news 24 hours a day on air and on Quick Take by Bloomberg. I'm Amy Morris. This is Bloomberg.
Have you ever thought, I wish I'd had that information sooner?
What does this tell us about the state of deal making?
Let's fix that.
One unprofitable company plus another doesn't make a profitable company.
Carol Mazur.
Talk to us about real-world applications.
Jason Kelly.
Remind us what the potential is for everyday folk.
Bloomberg Business Week.
Vice President of Exploratory Science is one of the cooler titles.
Weekday afternoons at 2 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg Business Week, now live on YouTube.
Hi, I'm Danica Patrick. Watching my nieces grow, play, and learn is amazing, but not every child gets to be carefree. 1 in 6 kids in the U.S. are hungry. This breaks my heart, and it's something that Feeding America is working to change. Each year, the Feeding America network of food banks rescues billions of pounds of good food that would have gone to waste and gives it to families in need. To help, visit feedingamerica.org.
Brought to you by Feeding America and the Ad Council.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies. Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
When you went car shopping, you meant business. You aced vehicle history searches and test drives. You out-salesman to the salesman. Now you've got your wheels. If you manage that, you can get your retirement plan on track. Visiting aceyourretirement.org can help. With 401k tips and smart saving strategies, you'll have the info you need to get more for your future. Go to aceyourretirement.org, because when it comes to speeding past financial challenges, you're an ace. Brought to you by AARP and the Ad Council.
For centuries, Welsh farmers have been perfecting the balance between maintaining the spectacular landscapes of Wales while producing delicious lamb and beef. Lucky for us, we have everything we need from the elements: grass, rainwater, and a whole lot of pride. Sustainability is key as we continue to work in harmony with our surroundings to bring you a plate that's uniquely Welsh. It's in the taste. Learn more at eatwelshlamandwelshbeef.com.
We've all been in one, but how much do you really know about black cabs? For instance, did you know that a black cab has to be tall enough to accommodate an individual wearing a bowler hat? That's a lot of space for you and your briefcase. Or that Free Now drivers can use the bus lanes, the perfect getaway to make your meeting in time. And with 2-minute central London pickups, you needn't waste time searching for a taxi. Just download the Free Now app today and take the hassle out of getting round London.
For up to 50% off a choice of floors and beds. For an extra 20% off selected ranges. For something for everyone. Carpet Right. For life. Offer ends Tuesday.
Mayday, Mayday, this is Red Dwarf. Our engines are dead and we're being sucked into a black hole. Can anyone hear me? Over?
The only thing that's over is us, Crichton. We're finished.
Guys, relax. I've got Smart Breakdown with the AA. It sends them your vehicle's fault data, so they should know what's wrong before they even get here.
I don't believe it.
What, that they'll already know what's wrong?
No, that you're actually capable of something useful.
The future of breakdown today. The AA. Drive smart. See theaa.com for details.
Get to know the real Ant McPartlin with the paper that knows him best. From the woman who saved him to the best friend who never gave up on him. Read all about how the troubled star beat his demons in an exclusive 24-page magazine special. Only in the Sun on Sunday this weekend.
Hairy Bikers here. This message goes out to something very special. Yes, we're talking to you, chicken. Maybe we've been seeing too much of each other. But times have changed, Dave. We've been cheating on meat. Thing is, no stocks make veggie dishes so irresistible that cheating on meat is proper tasty. Oh, dear chicken, you were the fire in my life. But it's all about you now, aubergine katsu curry. Prepare to be wined and dined, my love. Cheat on meat with no veggie stocks.
Here's your King Box Double Melt.
Thanks. And if you could get this back to me by Tuesday. What's this?
My homework. I just need 2,000 words on Tutankhamun.
But I...
Oh, come on. It won't take you long. Oh, and don't forget to double-check the spelling.
Check the spelling?
The King Box Double Melt, including a double burger with melted cheese, fries, side, and a drink. At just $4.99, you owe us. Big time. Subject to availability at participating restaurants. Only at Burger King.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.